Yeah. I welcome all of you to this fourth webcast. Fourth webcast of this month. We are organizing series of webcasts as we are celebrating or observing the GST Awareness Month, January 2017. ICAI is celebrating to make aware our members so they can contribute to the society better. We have with us our President, CA M. Devraj Reddy, our Vice President, Nilesh Vikamse. I am requesting first our Vice President to say a few words and so we can start. So please.
Thank you, Vice Chairman Sushil Goyalji. It's indeed a pleasure to join this webcast organized by the Indirect Tax Committee of our Institute. Friends, as you are aware, yesterday we saw the culmination of the protracted discussion of the GST Council, and now GST is there for everyone to see from 1st July onwards. So there are a lot of naysayers saying that whether it will be applicable from 1st April, 1st July, whether it's going to come at all, whether it will lapse by September. But all the naysayers have been, put to rest, and now we'll have GST coming in from 1st July. Our President will speak more about what's happening at the GST level. But for me, what has been the greatest learning out of this whole experience, the way the government has brought in this law. First, after a lot of difficulty passing the constitution bill, after that the GST Council, which comprises of the central government and almost 28-29 state governments, having dialogue on diverse issues where there are different interests of different parties, and coming to a conclusion, week after week meeting, almost 9 meetings held till date after the constitution bill was amended. Whatever contentious issues, there may have been contentious of 1 week, 2 weeks, 3 weeks, but finally finding a road ahead. I think it's a very great learning for all of us, whether it's our family, whether it's our organization, any walks of life. There could be differences, but if we decide to sit down together and resolve, I think it's a very, very big achievement. And if government with different parties and with different regions can do it, states and this interest, I'm sure we also can do. So for me, that has been a very, very good role model, and I'm sure all of us will take that learning and try to resolve issues amongst ourselves. Coming next to the GST itself, friends, those who are watching this webcast, GST is a new law which is coming up, and we at the Institute have done whatever it is required to see that we give various suggestions to the government based on the ground realities which are there, what difficulties business will face, what difficulties profession is going to face, escalating it to the government, discussing with the CBEC, with the Revenue Secretary, with the state government, and we are going to continue to do that till the time the law comes in and stabilizes. Next, of course, is for all of us, it's a huge opportunity, and that's the reason why the Indirect Tax Committee is doing a wonderful job as far as the webcasts are concerned, as far as various background materials, as far as the handbook. So my request to you would be kindly absorb whatever is being communicated by way of various modes, whether it is this webcast, whether it is handbooks, whether it's training materials, seminars, conferences. This is one area where we definitely have your partners in nation building, but we want to showcase to the government that we are really partners in nation building. First, in seeing that the knowledge is disseminated with our members. Next, take up with the businesses and the industry and disseminate the knowledge to see that how this law is implemented effectively and be the true partners in nation building. With this, I really compliment the Indirect Tax Committee for doing such a wonderful job. This is, they have decided January as a month of GST, the perfect timing. January itself, that was the courage of conviction that the committee had that this law is going to be passed. So way back in December itself, we decided January is going to be the GST month. And yesterday we saw it happening. I compliment the committee and wish and request them to do more and more as far as GST is concerned in interacting with the government as well as dissemination of knowledge is concerned. Thank you.
Thank you, Vice President, sir, for nice words you have said about the GST and about the committee. Now I am requesting our Honorable President, Mr. Levy, to give his speech.
Thank you, Shishi. My dear professional colleagues and other members of this webcast team, my colleague Nilesh, Shishi, and today's speakers Ashok Batra and Bimal Jain. Very good evening to all of you. Friends, change is one thing which is certain, that change you have to adopt. I am sure all the members are geared up for adopting that change. I have seen across the country, on my travel, every member is eager to adopt this change law of GST, and the process indirect tax committee under the leadership of Madhukar and Shishi Goyal is going very effectively. They are taking all the things. I have to place on record Atul Gupta also, who is very expert in this indirect tax. Three people, Madhukar, Shishi Goyal and Atul Gupta, are helping me to how to guide the government, how to assist government requirements. They are doing very concentratedly, and I congratulate the entire indirect tax committee, including the co-opted members, this journey of GST. Now coming to the government, has taken such a way decisions. There is a lot of bottlenecks, a lot of differences between the state and central government. The revenue which is enjoyed by state government for the welfare activity, now central government as a pool has taken. Being the helm of the affairs, finance minister and then GST club, other state finance ministers here, how to share the revenue. There is a different discussion. Ultimately, a decision has come. 1.5% turnover, 90% by state, 10% by the central government, and they 1.5 above, 50% each, respectively. They are going to monitor in the process. A different concept will evolve, and definitely it will be more friendly, helpful, and maybe a little bit trouble-free also, because the monitoring done by GST club and state and central government have to follow. More procedures and policies will come. Because of that, it will be more friendly and more compliance is also very easy. I can say some problems here and there, some unethical officers, whatever they put in trouble of the business, it will not be there, because it has become a universe. Universe means country specific. Every state has to adopt this thing. Definitely the benefit will come. I'm not going to much the subject, because speakers who are thorough in this subject are going to share, having a lot of inputs. End of this webcast, we will have a lot. I think this is the fourth webcast. Definitely will enrich in this subject, or some thought-provoking issues will arise to you for future to satisfy, which helps to upgrade your professional skills and to help your clients at large. But coming to the GST, this indirect tax committee is now already taken publication of background material, and they have given different seminars are distributing, and even for government also they are given. Then modern GST law, draft GST rules, they are organizing more than 95 programs and identifying more than 350 new faculties of indirect tax through faculty identification program 1 and 2 in 22 locations. It's a big thing, equal distribution. A speaker will not take from Bombay, Delhi or Calcutta. So different places, 22 locations means any branch or any industrial house, any welfare, any organization, trade unions, they want speakers are available at their doorstep nearby, so that more knowledge sharing will be happen. So this is a very innovative idea the committee has taken. They are doing the best, and they have formed 18 research study groups, because the problems being a new law, say cotton industry or a sugar industry or different rice miller associations, different issues of the law will come. Different states have different practices. Now that practices and conventions breaking, a different path have to come. That issues, definitely these research committees will study properly what is the impact, so that they will bring to the notice of the government, where we are having very good accessibility to different officials, where they are giving high respect our suggestions and ideas. So this is going to help. That way research committee is doing its best. Now immediately the future plan also, I came to know, they discussed both chairman and vice chairman. They want to prepare background material and revise the model GST law, and also they are making handbooks of GST for traders and manufacturers, because the law is very hard sum you are unable to understand. To have a friendly, what is the law, how you have to do. Basically basic knowledge. Ultimately you have to depend on question only for implementing the law. But basic how it is happening. This is a Greek and Latin study. To have a small idea, I requested the chairman also to have a CSC for everybody to have a simple understanding how it goes. They readily agreed it is going to come by then. It will be very friendly, helpful. Every trainer, how the lab works, how it is easy for you, what is important, will be knowing to that. And sequential of the questions and multiple choice questions also they are making, so that people by reading the question and answer is specific industry some issues that you can understand. And future we can revise this depending on the different experience of different people we can make. Again we are giving faculty identification program, trainers, so that more knowledge people are there, so every industry, everybody can get. More than that, we are all aware we are having 160 branches, 5 regions. Each branch seminar and conferences is GST. We are having 1 or 2 sessions, and some places the entire day we are having GST sessions. That's why definitely you are going to enrich this subject, and the institute is giving a very possible opportunity to the member to make use of this thing. That it is up to the member how to involve. With only my session, many of us are concentrated on direct taxation and our company law or banking activities. Now an opportunity has come, even though some senior members, this earlier in our syllabus, it is not there in direct tax, so they may not be in touch. Now it is becoming a national law. I request all of you involved in this subject and make use of this. Definitely a client wants one shelter every services. So if you say I will do direct tax, I don't do indirect tax, there is a chances of slippage of some clients also. My request is involve all these people, all these both taxes, it will help a lot. And I am sure wherever any branch or any member wants any speakers, anything, you come to the committee, definitely they send the required speakers. Or if you want any seminars and conferences, please send to the CP committee. The programs apart indirect tax committee, CP committee also will take the program. Will arrange required faculties or any assistance required a small branch where number of people are less, how to do, definitely will take up. Last but not the least, I think webcasting in the new year is my first. Happy New Year 2017, Happy Sankranti, Pongal, different parts of the country, different names are there. Bihu in Assam, so the Lohri in part, so I wish all the best. Friends, last but not least, I want to share. Budget is going to happen on 1st February. Please kindly be ready with concentrating budget and catch all your points, whatever sessions you require. Post the memorandum, the institute is going to gear up, way forward. And more than that, 2nd February, Revenue Secretary is going to come to the institute to have a webcasting. Myself, VP, and direct tax, indirect tax, and international taxation committee chairman are all going to be there. Any ideas, thoughts you get from first day of budget, please mail us so that we can discuss and get it. Maybe one more opportunity is there, but this I can share. And I all welcome you. 8th, we are having an annual program, annual day celebrations at Delhi. All of you at Vignan Bhavan, I request all of you to join the program. It happens to be at Delhi, any member. And Delhi members are welcome because proximity is there, you can join directly. Those are out of the Delhi. You happen to be Delhi, please kindly join this program. Very more networking and friendship and what is happening interior, we have a first-hand information from the President, Vice President, and how the institute has to evolve. Important guests will be there. With this, I express my sincere thanks to Shil to make me to present here to share some of our ideas. Thank you, one and all.
Thank you, sir. Thank you. We are indeed pleased to have you here, sir. The word of wisdom definitely help our members. Thank you very much. Now we are moving to the speakers. We have Sir Batrali, who has written authored book on service tax, that is Service Tax Law Procedure 25th edition, Service Tax Credit Recovery. All throughout the country we know about him. We also have another speaker here, Bimal Jain. He is more popular on video now. You can have this video lecture available on all subjects for Bimalji, thorough knowledge on GST. So starting with Asad Batraji, today's topic, now over to Asad.
Good evening, friends. Now friends, it is becoming clearer that this year, that is 2017, is going to be the year of GST. We all understand after the 101st Constitutional Amendment, the GST has to be introduced prior to 16th September 2017. So the year of GST has already been started. But according to me, nothing to worry. It is an indirect tax like any other indirect tax like VAT, service tax and excise, wherein I have to collect the tax on behalf of the government and pay to the government, and I am not going to bear the incidence of tax. Friends, it is not only indirect tax like service tax, excise and VAT, it is also a tax which is being based on the technique of VAT. VAT is not the name of the tax, it is the name of the technique, that is value added tax. And friends, not only that, if we further analyze it, here also only 3 steps are involved which are there in any kind of indirect tax, that is calculation of your output tax liability, claim of tax credit and then payment of tax. It has further so much of similarities with the existing indirect tax system, like unjust enrichment, you can't make profit out of taxes, the same provision has been borrowed here in the case of the funds also. It is the same law where the cum duty principle shall apply, it is the same law where the revenue neutrality will be there. Then you can ask me, Mr. Batra, if there is so much of similarity, what is the difference between the present system of indirect taxes with the GST? Before I come to the differences, let me tell you it is regressive in nature also, as the present indirect taxes are there. Everybody has to bear the same incidence of tax irrespective of his financial or his worthiness. Friends, in spite of all these similarities, there are some huge differences between the present existing indirect tax system and the GST, and the one of such major difference is the taxable event. Like in the present indirect taxes, if we talk about sales tax, then the event is transfer of property and goods, excise it is manufacture, service it is provision of service, but in GST it is going to be supply of goods and services which will be subject matter of tax. And when we talk about goods and services, we need not think in the conventional terms what are the goods and services and what is the judicial pronouncement of that. I would like to draw your attention to Schedule 2, which clearly spell out that work, contract, restaurant services. So, in both these cases, there is a transfer of property and goods and provision of service, but they are being treated as a service only. Similarly, right now we have 2 types of transactions where I am giving my material to somebody else and the transfer of effective control and possession is also being transferred. It's a deeming sale under Article 366(29) capital A of the Constitution. And once I am giving that material where effective control and possession is not being parted, it is subject to service tax. But under GST, it is being treated as a service. So the point I intend to make is that we need not have to take the traditional meaning of goods and services. We have to read along with Schedule 2, wherein in specified cases even the work contract has been held to be a service. And once it is a service, then all provisions with regard to the service like time, like place, and for example in compulsion scheme it is not applicable to the supply of services, so work contractors who are engaged in the work contract business shall not be eligible to claim the benefit of composition. Besides that, it's the destination-based consumption tax, we all understand that. Besides that, this is one law wherein the item which has been prescribed in Schedule 1, they are subject to service tax even if they are without consideration, and self-supply has also been made subject to tax. Not only that, Section 163 anti-profiteering has been brought into that, and finally the concept of centralized destination is gone because it is now state-based, destination-based consumption tax. So you have to seek registration from all the states from where you are supplying the goods and services. And the today's topic in this background is with regard to levy, exemption, composition and transitional provision related to all these 3 items. Now I will request Mr. Bimal Jain to deal with the subject of levy, exemption and composition, and thereafter I will supplement him, and thereafter we will go with the transitional provision. Over to Mr. Bimal Jain.
Good evening, friends. Let me start with the levy section first. Levy is very important for all of us together because levy is going to be a taxable or chargeable section under which GST can be levied. Section 8, subsection 1 This is a chargeable section in model GST law where GST is applicable. And how it is being defined? Let me rephrase for all of you together. There shall be levied a tax by name called CGST and SGST on intra-state supply of goods or services. IGST in case of interstate supply of goods or services as defined under Section 5 of IGST Act 2016 on a value as determined under Section 15 of Model GST Act at a rate notified by central government or state government on recommendation of GST Council but not exceeding 14%, meaning thereby CGST and SGST taken together, the rate will be maximum of 28% and to be collected in such manner as may be prescribed. This is what the chargeable section, section 8, subsection 1. Now in this section there are 4 items, very important items. It first talks about the CGST and SGST applicable for intra-state supply of goods or services. In terms of section 5, IGST Act 2016, IGST applicable for interstate supply of goods or services. And this is applicable on value as determined under section 15 of Model GST law. Subsequently said at a rate notified by central government and state government but not exceeding 14%. So CGST, SGST taken together not exceeding 28%. And to be collected in such manner as may be prescribed. So 4 items are important. And I want to deal with 4 items one after another. Let's understand, because levy is important one, so it would be important for all of us to understand how the taxability would be in case of intrastate supply or interstate supply. In case of intrastate supply of goods or services, as I said, CGST and SGST applicable. But to have comparison, how the taxability will change from existing indirect taxes to proposed GST regime. In existing indirect taxes, let's take goods taxability for 100 rupees. On 100 rupees, central excise duty levied 12.5% and VAT on an average levied 14.5%. And why I'm saying 14.5% on an average, because VAT rates vary from one state to another state. Approximately 27% indirect tax levied for goods taxability. Now in this situation, if you are a trader, you are registered under VAT provision, you can take credit of VAT component, but you can't take credit of central excise duty unless you are manufacturer, first stage dealer or second stage dealer. And second, VAT is calculated inclusive of central excise duty. So this is the existing scenario of goods taxability. What will happen post GST? Post GST, on same 100 rupees, I am going to apply CGST and SGST. Next question comes, what would be the rate? GST rate applicable. Because today, central excise duty levy 12.5%, VAT levy on an average 14.5%. So this 28% which we are referring to, before deciding 28%, I would like to highlight GST Council in their meeting on 3rd of November 2016 decided 4-tier rate: 5%, 12%, 18%, 28%, and 28% with cess. Cess is going to be levied for demerit goods, luxury cars, aerated beverages, tobacco and pan masala. So this 4-tier rate is being prescribed only for goods taxability. For service taxability, GST Council has not yet decided, but it looks like standard rate for GST applicable on services would be 18%, and there would be another lower class, lower rate, which would be 12%. But It needs to be decided by GST Council. Having said that, now we have to take this example, what rate applicable on a particular classification of goods. GST Council has only decided 4-tier rates, but they have not classified corresponding goods applicable in respective rates as decided by GST Council. So to understand our practical example which I was referring to, let's assume my goods is taxable at the rate of 18%. If 18% taxable, now it needs to be divided between CGST and SGST. It may be a case CGST is 8% because central excise duty is 12.5%. SGST is 10% because VAT rate is 14.5%. Or maybe equally divided 9%, 9%. It would be approved by GST Council. Now having said that, let's hypothetically assume that 18% is divided as 9% CGST and 9% SGST. Then how is it going to be taxable on 100 rupees? So intra-state means I'm supplying within same state. So let's say I'm a supplier and you all are recipients in the state of Delhi. We both are in Delhi. So when I'm supplying for 100 rupees, I will apply 9% CGST, 9% SGST. What happens? Then you are purchasing these goods. So today I am going to give you some good mantra. They are GST mantra. As normally when we started our accounts, when we have taken accounts for commerce education, we were given 3 golden principles. And what was the golden principle given to us? Debit to what comes in, credit to what goes out. And we have memorized those mantra and we have never questioned. Similarly, I am going to give you some mantra today for taxability, availing credit and utilization of credit. And you have to keep this mantra in your mind. It has got some basis. But for today, you should keep these mantra as preparation for GST taxability. Mantra number 1. When you purchase locally within same state, then supplier has charged CGST and SGST. You can claim credit of CGST in CGST credit account, SGST in SGST credit account. Now let's assume you are selling the same product, same goods for 150 rupees in Delhi. I just pick up what Batraji has said just a while ago. GST is nothing but a value added tax. So what happens? On 150 rupees, you are again going to charge CGST 9%, SGST 9%, meaning thereby your output liability would be CGST 13.50 paisa, SGST 13.50 paisa, and you got corresponding credit of 9 rupees in CGST, 9 rupees in SGST. So mantra 1 says CGST credit can be used for CGST liability and SGST credit can be used for SGST liability. But CGST and SGST should not be cross-utilized. This is a mantra 1. So in this given situation, CGST liability 13.50 minus 9 rupees corresponding credit lying in CGST account, you will deposit only 4 rupees 50 paisa in cash in CGST account. Similarly, you will use SGST credit of 9 rupees for discharging SGST liability of 13.50, meaning thereby you will deposit only 4 rupees 50 paisa in cash in SGST account. So what is the conclusion coming out? It's a value added tax. That is yours. Whatever tax is paid on purchase, credit available, and this can be adjusted with the output liability with the mantra given to you. So this is what intrastate supply of goods or services. Now coming back to interstate supply of goods or services. And taxable chargeable section is section 5 of IGST Act. And it says IGST applicable, and IGST is a central levy. IGST is a central levy. It's a sum total of CGST plus SGST. Now to understand in a better way, I will carry forward with my same example. Let's say I'm in Delhi and I'm supplying goods to Haryana, Gurgaon. So interstate supply. So today on 100 rupees, I'm applying 12.5% central excise duty, and I'm applying CST, central sales tax, at the rate of 2% against Form C. If you don't give me the Form C, then local Delhi VAT rate as applicable. So being a trader, VAT dealer in Haryana, question comes, can you take credit of central excise duty? Answer is no. Unless you are a manufacturer or first stage dealer or second stage dealer. Next question comes, can you take credit of CST? Answer is big no. Neither to a trader nor to a manufacturer or first stage dealer or second stage dealer. Meaning thereby 14.5% is a cost. Not only this, even CST calculated inclusive of central excise duty. Meaning thereby 2% calculated on 12.5% also becomes part of costing in case of interstate trade or commerce. This is what the existing scenario. And this is what looks like state barrier. We cannot do interstate transaction. We open local warehouse in respective state to raise the taxable invoice so as credit is available. So now this concept is going to wash away and India is going to be a national unified common market. And how it would be? Let me carry forward with my example and explain to all of you. Now, post GST on 100 rupees, I am going to apply IGST, which is a sum total of CGST plus SGST, meaning thereby I will apply 18% rate on goods taxability, which I have discussed in my example. So on 100 rupees, I will apply IGST 18%. You are in Gurgaon, you are purchasing this goods from daily supplier. What happened? Can you take credit? Answer is yes, you can take credit. Now what happened? Where you will take credit? You will take credit of IGST in IGST credit account. Now subsequently, you are selling the same product in Haryana, in Gurgaon at 150 rupees. So before I say, I'm just provoking to all of you who are watching this webcast today, please tell me what would be your output liability. Your output liability should be CGST and SGST because you are doing intra-state supply of goods. So on 150 rupees, you are going to apply 9% CGST and 9% SGST. Meaning thereby your liability will be 13.50 paisa CGST, 13.50 paisa SGST, but you got credit of IGST 18 rupees. So mantra number 2. What is the mantra number 2? Mantra number 2 says this IGST credit can be used sequentially. Sequentially means one after another for the payment of IGST, CGST and SGST. This is the sequence you have to follow. So whatever I say to you, you have to keep it in your mind. And before I move further and solve this query, I would like to highlight today existing indirect taxes are origin-based tax, right? But GST is going to be a destination-based consumption tax. It will accrue to a state where goods are ultimately going to be destined and consumed. So in this example, how it is being proven, I will explain to all of you, just you go all along with me. Now in this case, you got credit of IGST, 18 rupees, but you got output liability of CGST, 13.50 paisa, SGST, 13.50 paisa. As per the mantra number 2 says, IGST credit can be used sequentially, first for IGST, then CGST, then SGST, meaning thereby you are going to use IGST credit first for payment of CGST liability. So 18 minus 13.50 CGST liability, 4 rupees 50 paisa left in IGST credit account. Now can you use IGST credit for payment of SGST liability? Answer is yes. So 13.50 SGST liability minus 4 rupees 50 paisa IGST credit, I am going to pay SGST 9 rupees in cash. In this given example, what happened, you are using IGST credit, central credit, for payment of Haryana state liability. In this case, 4 rupees 50 paisa central credit used for Haryana SGST, center will transfer this money to Haryana government. And you have deposited 9 rupees in cash. Ultimately, Haryana got 13.50 paisa on principle of destination-based consumption tax. That is how this mechanism will work. To understand in a much better way, let me reverse this example so that you can understand in a better way. Let's assume you have purchased locally 100 rupees. So you might have paid CGST 9 rupees, SGST 9 rupees, but now you're selling interstate. You're selling from Gurgaon to Delhi, Haryana to Delhi. In that case, at 150 rupees, what is applicable? IGST applicable. When IGST applicable, so on 150 rupees, you will apply 18%, your output liability will be 27 rupees. Am I clear to all of you? When 27 rupees IGST liability, but you got credit of CGST 9, SGST 9, mantra number 3, which is just the amendment of mantra number 1. In mantra number 1, what I said, CGST credit can be used for CGST liability, SGST credit can be used for SGST liability. Mantra 3 says, CGST credit can be used sequentially. First for CGST, then IGST. Similarly, SGST credit can be used sequentially. First for SGST, then IGST. Only CGST and SGST should not be cross-utilized. Having said that, now solve the query. You got credit of 9 rupees CGST and 9 rupees SGST, but you got output liability of 27 rupees IGST liability. Question comes, can we use CGST credit for payment of IGST? Answer is yes. 27 minus 9, so 18 rupees IGST liability is left. Now, can you use SGST credit for payment of IGST liability? Answer is yes. 18 minus 9, so you will deposit only 9 rupees in cash in IGST account. But in this case, you are using Haryana SGST credit for payment of central liability. In this case, Haryana will transfer 9 rupees to central government. 9 rupees you have deposited in cash. 9 rupees which was there in CGST account adjusted for IGST automatically retained by the central government. Why I say this example? Just to explain to all of you how GST is a destination-based consumption tax. You purchase locally within Haryana. You pay CGST and SGST, but Haryana is not able to hold back the money because they are selling the product to Delhi. So if at all SGST credit, SGST amount to be given, it would be given to Delhi if it is consumed in Delhi. If it is not consumed in Delhi and Delhi again interstate supply is happening, then it will go to a state where ultimately it is going to be consumed. So I have given this overview from chargeable section. Now chargeable section got another component. This GST applicable on the value as determined under section 15 of model GST law. So what would be the value? Today if you look at central excise, we got number of valuation methods, MRP based method, transaction value based method, production capacity method. So value is very, very important, and section 15 clearly says GST applicable on transaction value, paid or payable, when supplier and recipient are not related and price is the sole consideration. So GST, whether CGST or SGST on intrastate supply or IGST on interstate supply is applicable on value, and value will be transaction value when supplier and recipient are not related first, and price is the sole consideration. When I'm saying so, This valuation provision further says transaction value includes, what it includes? There are 5 specific items which is includable. The item number 1, all other taxes, duties and cess other than CGST, SGST, IGST need to be included. So you have to keep it in your mind. Alcoholic liquor for human consumption out of GST net in terms of Article 366(12)(a), because Article 366(12)(a) clearly says GST means any taxes on supply of goods or services or both except alcoholic liquor for human consumption. 5 specified petroleum products would be out of GST and would be taxable from a date to be notified by GST Council. And what are those 5 specified products? Petroleum, petroleum crude, diesel, natural gas, aviation turbine fuel. So these are the 2 specific products out of GST. So existing taxes will continue on alcoholic liquor, state excise and state VAT applicable. On petroleum, central excise and state VAT applicable. So such other taxes you import, you pay BCD. BCD is not convertible. So BCD becomes a part of valuation. So all other taxes, duties and cess includable in transaction value for chargeability of GST, first component. Second, if recipient paid any amount which is otherwise to be paid by a supplier for supply to be made, then this need to be included. Third, any incidental expenses need to be included. What could be incidental? Packing charges, commissions, etc. Item 4, any kind of late fees, interest charged on delayed payment of consideration need to be included. I am not going each of the components for detailed deliberation because valuation would be different topic for technical discussion in future webcast. And item number 5, any subsidy linked to the supply need to be included except when given by central government or state government. So these are the 5 items need to be included in transaction value. And what is excludable? As stated under section 15, any kind of discount given before or at the time of supply and mentioned on the invoice. Even post-supply discount is deductible. Only condition, it should be known before or at the time of supply by way of an agreement between supplier and recipient, and these discounts are linked to the invoices, which is subjective issue, and recipient has reversed the credit to the extent of discount offered by a supplier, which is subjective issue in terms of how these post-supply discounts need to be captured. So we'll discuss in the valuation class, but here for the time sake, valuation excludes discount before or at the time of supply, even post-supply discount. So valuation is the provision. Now just to recall, when we look at first model GST law which came on public domain on 14 June 2015, the provision, GST valuation provision was there, GST valuation rules was there. But while giving revised model GST law which came on public domain on 26 November 2016, there is no GST valuation rules provided. So I have only discussed what is being considered under section 15 of model GST law for valuation, which is transaction value paid or payable when supplier and recipient are not related and price is the sole consideration. Having said that, just move further. What is the third component? Rate. Rate I have explained to all of you. Now when I am discussing rate, I want to touch base what happened for service taxability. For service taxability, there is no rate prescribed. Today's service tax applicable at the rate of 15%, which includes 0.5% Swachh Bharat cess, 0.5% Krishi Kalyan cess. So everyone is asking, please tell us what is the GST rate applicable for service taxability. As we are hearing, that standard rate, which is 18% considered, may be applicable for taxability of services. And there will be another slab for service taxability, lower rate 12% may be applicable for some of the specified services under abatement notification or valuation rule. So these are the rate applicable which is being prescribed. Now the last component of chargeable section says it should be collected in such manner as may be prescribed. So before I discuss this thing, I would again like to invite Batraji has started and he has stated very categorically the existing taxable event manufactured for excise duty, sale tax, VAT or CST for sale of goods including deemed sale in terms of Article 366(29)(a) or service tax applicable for rendering of service. These taxable event will go away. And what is taxable event for chargeability of GST? Supply of goods or services. That is what? But GST applicable, CGST and SGST on intrastate, IGST on interstate, it should be collected in such manner as may be prescribed. Meaning thereby there will be point of taxation. We have seen in service tax regime. We are service tax SSC, we are aware of there is a point of taxation rule 2011 which is applicable for service tax chargeability. Even the advance money received today for rendering of service after 3 months, service tax applicable on advance money received. But if I pose this query to you, if advance money received for supply of goods after 3 months, whether excise duty applicable, whether VAT applicable, not applicable. But now specifically time of supply, this is nothing but a point of taxation provided in model GST law. Time of supply is being given for goods under section 12. Time of supply for services under section 13 is being prescribed. Just to highlight what is therein, time of supply for goods or services, earliest of the following: date of issuance of invoice or last date when invoice needs to be raised under section 28 of model GST law, or date of receipt of money. So in the same example which I narrated just while ago, if you take advance today for supply of goods, let's say after 1 year, with a GST applicable, answer is yes. And these are the similar provision we have seen in point of taxation rule for service tax chargeability, now being replicated even for goods taxability. Next question will come. If GST applicable on advance money which needs to be paid, with a corresponding credit available to a recipient of goods or services, answer is no. GST applicable on advance money received, but corresponding credit would be available only at the time of receipt of goods or services, meaning thereby, just to highlight that on advance money received, you will be discharging GST liability, but you will not be raising taxable invoice. Rather, you will be raising receipt document as prescribed under section 28 of model GST law. When you are actually supplying, you will raise a taxable invoice, so your return will correlate. Whatever taxes paid on receipt document gets adjusted at the time of supply made and taxable invoice generated. So you need not require to pay GST liability when taxable invoice raised at the time of supply of goods and services. But for recipient, credit is available only when the receipt of goods and services happen. This is the first part of chargeable section. Now going further, section 8, subsection 2. This is there in my presentation. Section 8, subsection 2 very clearly says CGST and SGST for intrastate, IGST for interstate to be paid by a taxable person. So what is important? Taxable person. So who are taxable person in GST? Taxable person as defined under section 10 of model GST law. Taxable person means a person who is already registered under central excise, VAT, service tax, or who is required to take registration in terms of Schedule 5 of revised model GST law. And who is supposed to take registration? Whose aggregate turnover crosses 20 lakh rupees, which was initially 9 lakh rupees in first model GST law. And it is 10 lakh rupees for northeastern states, including hilly states. 20 and 10 lakh required to take registration. And who all are excluded? There are two specific persons excluded from taxable person: agriculturist and any person who is exclusively supplying non-taxable goods or services or exempted goods and services. These two persons are excluded from taxable person definition. And third, which is very important, the criteria of this threshold amount 20 lakh and 10 lakh is not applicable in case of compulsory registration. Even for rupee 1, compulsory registration required. And who all are? If you are doing interstate supply, reverse charge, ISD, TDS director, TCS, casual dealer, non-resident foreign supplier, e-commerce operator, or supplier supplying goods through an e-commerce operator, or online information database access retrieval service. These are specified categories for which compulsory registration is a must, even though rupee 1. That is what taxable person. So section 8, subsection 2 clarify. Coming to section 8, subsection 3. This says central government and state government can notify specified goods or services under reverse charge mechanism. If you are service tax assessee, I am sure you know what is the meaning of reverse charge mechanism. Reverse charge mechanism means recipient has to discharge the tax liability. Like under service tax, recipient has to pay service tax. Under GST, recipient has to pay GST liability only for the specified goods and services notified by central government and state government on recommendation of GST Council. When I am saying so, again you have to keep it in your mind that GST to be paid in such manner as may be prescribed. So time of supply provision is again important for discharging reverse charge liability, and it is being prescribed under section 12 for time of supply for specified goods under reverse charge, time of supply for specified services under reverse charge for section 13. And what is, as a simple language, I can tell you for goods, earliest of the following: date of receipt of goods, date of payment, or date following the end of 30 days from the issue of invoice would be the POT for discharging reverse charge liability for specified goods. For services, date of payment or date following the end of 60 days from the date of issuance of invoice would be the POT. And you'll be recalling Rule 7 of Point of Taxation Rule. And what was the provision? Date of payment, provided payment made within 3 months from the date of invoice. Otherwise, date following the end of 3 months would be the POT. This 3 months is being reduced to 60 days in model GST law for reverse charge liability for specified services. When I'm saying reverse charge, you have to again keep it in your mind. There is no threshold amount of 20 lakh and 10 lakh. Compulsory registration even for rupee 1. Now section 8, subsection 4 of chargeable section. And this is a very interesting one. Central government and state government can notify specified services. Those are being provided through an e-commerce operator. In that case, e-commerce operator would be deemed a supplier of service. Are you recalling aggregator model, Uber and Ola? In that case, what happens? Aggregator is only running a web-based application. Service provider is different, service recipient is different. Now, in this case, if such specified services provided through an e-commerce operator, in that case,
such e-commerce operator would be deemed a supplier of service, and he has to discharge all liability and compliances as if he is supplying the services. So this is section 8, subsection 4. I'm through with the chargeable section, and Sri Batraji wanted to add something further as observation, so request Batraji to add on.
Thank you, Bimalji, for explaining section 8 so nicely. Now I would like to only focus what he has already stated, that in terms of section 10, subclause 2, a person who has obtained or is required to obtain more than one registration, whether in one state or more than one state, shall in respect of each such registration be treated as a distinct person. Similarly, he says an establishment of a person who has obtained or is required to obtain registration in the state and any of his other establishment in another state shall be treated as establishment of distinct person. So that means self-supply has become taxable. Apparently, it appears to be fine enough. If self-supply is taxable, there is no issue. But if you analyze it, then you will find it as a huge financial implication. I'll give you an example. For example, in Ludhiana, there is a manufacturer who is into the woolen manufacturer. Woolen garment is being manufactured by him. Now, earlier on when he used to transfer the goods to his showrooms in other states, he was supposed to transfer those goods against F form, and the reversal was only 2% of the local purchases made by him. But now, because he is making the production throughout the year and the sales are taking place only 3 months, November, December and January, of course in February there is a season sale, so kindly appreciate the person who has the goods are manufactured in the month of March, and once he will transfer it to his branch, he will liable to pay, let us assume 18% is the rate of tax on 18% of value, and assuming his turnover is 12 crore, so that means every month he has to pay 18 lakh rupees, and for the month of goods which is manufactured in the month of March will be sold in November, so there will be a blockage of almost 8 months, April 7 months. So he has to invest huge financial capital. So now, as a chartered accountant, we have to advise him. There are two situations. One, you keep on advising this and bring in new additional capital, or alternatively, you can store the goods in your godown, bear that cost of insurance, etc., and then transfer the goods only in the month of November or October, so that immediately next month the credit is available, resulting in huge financial savings. So depending on the turnover and the cost of maintaining the warehouse, etc., you have to look into that and take a wiser call. Secondly, once Mr. Bimal Jain was rightly explaining that work contract is now a service. Once it is a service and the tax is levied on the goods, the rates are, as you have already stated, 5, 12, 18 and 28 plus cess. Now again, kindly appreciate, there is a huge amount of tax planning involved in this once there are rates which are different for the goods and for the services, and works contract which involves material and services both. Let us say there is a contract of 100 crore. If it is a service, I don't apply my mind, then I am liable to pay 18 crore rupees as my output tax liability, and I will get the credit, assuming 70% is the material involved in that, and there is 8.4, assuming 10% is the average rate. So my incidence of tax is approximately 9 crore 60 lakh. Now, in case I split this contract into two parts, one, supply of goods and then provision of service. If I do that, then my output tax liability gets reduced to only 13.8 crores, because on 70 crore I am liable to pay 8.4, 70 crore material, assuming 12% even the rate of average rate of tax, and on 30% 5.4. So 13.8 is the output tax liability. So there is a huge saving of money. So what I am trying to say, if once works contract is a service and goods and services are liable at a different rate of tax, so in case we split this contract into supply of material and service separately, it will result into huge saving. With these words, I will say, Mr. Bimal Jain has rightly explained section 8 and section 5 of IGST, which deals with the levy. Now I will hand over to Mr. Bimal Jain for his comments on composition, that's in section 9 of the GST Act.
Thank you, sir. Thank you very much. And I would also like to have observation on 2 points, and will take input from Sri Batraji as well. Now, he has rightly said that in terms of Schedule 2, specifically providing matter to be treated either as supply of goods or supply of services. Should declare service item like construction, ICR, IT software, right to use of movable goods, works contract, AC restaurant are now supply of service. So double taxation what we are facing today will go away in GST, but one important thing to highlight for all of you. Works contract is supply of service, no doubt about it. So I'm showing one example and then I will deliberate for 2-3 minutes so that we can understand. Now you supply AC along with erection, commissioning and installation. So you're clubbing two transactions, supply of goods and supply of services. Two or more supplies are clubbed together. Now under section 3 of supply definition, there is a definition provided for composite supply and mixed supply. Composite supply is what? When two or more supplies clubbed together and naturally bundled. Then what is happened? Principal supply would be considered and whatever rate applicable on principal supply going to be applied. In case of mixed supply, it's not naturally bundled. Then the highest rate that would be applicable. Now taking the same example further, AC along with installation and commissioning. So are we really going back to the past era? Are we recalling Coney elevator judgment, 3-member bench judgment? Supply of lift along with the installation. It was initially stated to be supply contract. But subsequently, 5-member bench has overruled that judgment and they say it's a works contract. So dominant intention test, which was a criteria, has gone away, but again back in GST regime. So whenever you are clubbing two contracts together, two or more supplies together, we have to see dominant intention test. So in my said example, supply of AC along with installation and commissioning, what is my intention? Supply of AC, but you are clubbing AC and erection and commissioning together. So let's say AC falling under 28% rate and erection, commissioning, installation falling under 18% rate. Clubbed together, naturally bundled, whole transaction would be taxable at the rate of 28%. So here again, like Sri Batraji has said, that huge tax planning can be done. Similarly, such contracts need to be looked into. And such contract, they are clubbing two or more supplies, which is composite, naturally bundled, and which is mixed, not naturally bundled, need to be looked into. Otherwise, you end up paying the higher tax, which is not the take and which we are not looking for. This was the first point which I want to draw. Second point, importantly, under service tax today, we have to take registration only when aggregate turnover crosses 9 lakh rupees. And you have to charge service tax when it crosses 10 lakh rupees. Perfect, alright. But when I say section 10 and I talk about compulsory registration, I said there is one category, interstate supply. So if you are engaged in interstate supply, it's a compulsory registration. Even you are not given any threshold amount, meaning thereby I am in Delhi and I am providing services to a Gurgaon-based client. Then in that case, I am providing interstate supply of service. In this given situation, I will not be given any kind of threshold benefit. I need to take compulsory registration. So these are the factors need to be looked into because we are discussing technical points. There may be lot of other points. So I can only request viewers to send me your queries, which we will take after our deliberation. Now let me move to the composition, which is given under section 9. And what is composition, by the way? You have seen the composition dealer registration which is given under VAT provision, wherein lower rate is applicable and corresponding input tax credit is not available, and you are not supposed to charge taxes on your output, on your sale is being made. Now on same concept, section 9 talks about that any manufacturer or trader having aggregate turnover less than 50 lakh rupees in preceding financial year, he can opt for composition dealer registration. In that case, GST would be not less than 2.5% for manufacturer, meaning thereby not less than 5% CGST and SGST, and for a trader not less than 1%, meaning thereby not less than 2% CGST and SGST. This is what applicable. If you take composition dealer registration, you are not allowed to avail input tax credit on your inward supply, procurement. You may be purchasing on taxable invoice, but corresponding credit is not available. Neither you are supposed to charge tax on your outward supply, meaning thereby you can't raise taxable invoice. You have to discharge liability not less than 2.5% for manufacturer, not less than 1% for trader, totaling together not less than 5% for manufacturer, not less than 2% for trader. This is what the basic provision of composition. Now, who cannot go for composition? Who are not permitted? I am a service provider. I got turnover of 30 lakh rupees. Can I go for composition dealer registration? Answer is very specific, no. It is not applicable for service provider. First, if you are doing interstate outward supply of goods, you can't go for composition dealer registration. Third, if any supplier supplying goods through an e-commerce operator, he can't go for it. Fourth, any manufacturer manufacturing specified goods, he can't go for composition dealer registration. And any person who is supplying non-taxable goods, he can't go for composition dealer registration. This is what the provision given for the composition dealer. So looks like to me, virtually looks like to me, the tax base is going to increase, because all service providers are out, they cannot go for composition dealer registration. If service sector doing interstate supply, which I just narrated, that I am daily-based chartered accountant giving services to Gurgaon-based clients, it's an interstate supply. So in that case, I will not be given any kind of threshold benefit. When I am discussing this one, I just would like to highlight when intrastate and interstate, how to determine intrastate and interstate, which I could have done in my overview part, but since I am just recalling now, let me touch base when a transaction is an intrastate and when a transaction is an interstate. For intrastate, thumb rule number 4, I given 3 mantras, that is the mantra number 4, and mantra number 4 says, for intrastate, as defined under section 4 of IGST Act 2016. For intrastate, location of supplier and place of supply should be in same state. And for interstate, under section 3 of IGST Act 2016, provision is location of supplier and place of supply would be in different states. So for location of supplier, this is the way we have to determine the place where registration is being taken, or fixed establishment. Fixed establishment is characterized by sufficient degree of permanence of human or technical resources, or establishment most directly concerned, or usual place of residence. For determining place of supply, we have to go back to section 7 for place of supply for goods, section 8 place of supply for import and export of goods, section 9 place of supply for services domestic transaction, indigenous transaction within India, and place of supply for services in export and import under section 10. That is how we need to determine when my transaction is an intra or inter, and I just drawn the reference that I am doing interstate supply, which virtually I am doing in NCR region. Today I am not supposed to take registration if my turnover is less than 9 lakh rupees, but tomorrow I have to take registration. Even composition dealer, there is a restriction, it is not for service provider. So looks like to me, this composition dealer benefit is being curtailed and not available at large, and tax base will increase, and thereby we need to look at compliances. So this was the composition. Now again handing over to Sri Patraji for his observation.
Thank you, Mr. Bimal Jain, for explaining this section very beautifully. But I just want to supplement him. When he says that any person who is making interstate outward supplies of goods is not eligible, then the definition of goods and services has not to be taken in the traditional sense, but it has to be taken with reference to Schedule 2, which clearly spell out under which conditions a particular good or service is being treated as a goods or service. As we have already discussed, that work contracts are being considered as a service, so any work contract dealer shall not be eligible to claim the composition scheme. Similarly, any person who is engaged into deeming sales right now, wherein he is giving the material where effective control and possession is parted, he is also out of the composition scheme. But this composition scheme restriction is applicable only when you are making outward supplies. There is no mention about the inward supplies. So you are being allowed to make interstate purchase. There is no problem with regard to that. Interstate supplies, rather I should say. Whereas in the present sales tax law, even those interstate purchases prohibits you and you are liable to get yourself registered immediately. There is no limit available in the respective state for which you are liable to not to get yourself registered. Exemption limit shall not apply. That is what I want to say. Secondly, my point is, as he has rightly said, the benefit of composition being restricted because the strength of the chain is the strength of the weakest link, and composition scheme is always being misused. Here, I would like to tell you that if you look at the present scenario, wherever the composition scheme is there, maybe with regard to work contractor, with regard to jewelry, with regard to chemist, etc., then the turnover limit is huge. For example, there is hardly any state where there is no composition scheme for the work contractor, and that composition scheme is available without any limit. Now we have to see that the limit has been restricted to 50 lakhs, but in case you compare the law with the existing one, then the composition scheme is available to a selected kind of dealers. But here, it is across the board. Across the board, this composition scheme is available. The only thing is your turnover should be less than 50 lakhs. That is another point which I want to make out with regard to the composition dealer. Friends, we have decided at the initial start of this webcast, myself and Mr. Bimal Jain, that the queries of the audience is very, very important. So we will devote 1 full hour to answer your queries, and because the topic we have to deal is still transitional provision and exemption also. So we'll try to complete this discussion by 7 o'clock, and then we will answer your queries up to 1 hour, that is up to the end of the webcast. Now, because we are dealing with the composition scheme, let me touch this transitional provision with regard to composition scheme itself here, and that is being dealt in section 172. It starts with the word a registered taxable person. Now you have to be registered with that, and you are paying tax either at a fixed rate or paying a fixed amount in lieu of the tax payable under the earlier law. These are two kinds of composition schemes which are presently applicable in various states. Then, if you are shifting to the regular rate, either your turnover is more than 50 lakhs or because of any other reason, you want to go voluntary for composition scheme, then whatever stock you are having, immediately before the appointed date, and as we have seen, today there is a development that Finance Minister stated that the GST shall be applicable from 1st July. So we are entitled to the credit of inputs contained in semi-finished goods or finished goods, provided such goods are being used for the purpose of making output supplies. You are not paying tax under composition scheme. You are eligible for the input tax credit under the GST law. You are in possession of the invoice or other prescribed document evidencing payment of duty under the earlier law in respect of such input, and such invoice or other document which were issued not earlier than 12 months immediately preceding the appointed date. Similarly, once I am discharging my liability under the composition scheme, and then I am out of composition scheme because my turnover has exceeded 50 lakh rupees, and then in terms of section 9(2), my composition scheme benefit is not available to me. So on that day when I am liable to discharge the liability at regular rate, then as I told you, we have to get the credit which was there. But if it is a reverse situation, I've been paying tax at regular rate, now I am opting for the composition scheme, then whatever stock I am having, that credit has to be reversed, and if there is some credit which is left, that shall lapse and shall not be available. So these are transitional provisions with regard to composition. Now I'll request Mr. Bimal Jain to deal with the topic of exemption. Over to Mr. Bimal Jain.
Thank you, sir. Now, before I start exemptions, I would like to highlight two important points which was discussed initially in this webcast. Aggregate turnover we are referring to, and we are referring to 20 lakh and 10 lakh rupees for registration, 50 lakh rupees for composition dealer. The reference is aggregate turnover to be calculated on pan-India basis for all the units together. It should not be considered unit-wise, calculated, consolidated. First part. Second part, what is the meaning of aggregate turnover? Aggregate turnover includes taxable supply, exempted supply, and export supply. These are the three items. And what is excluded? Non-taxable supply. If you compare first model GST law versus revised model GST law, even first model GST law aggregate turnover was including non-taxable supply, which is being taken out in the definition of aggregate turnover. Now aggregate turnover includes taxable supply, exempted supply, export and inward supply, interstate, which is referring to, and it should be calculated for pan-India basis. And what is excluded? CGST, SGST and IGST. This is what the meaning of aggregate turnover. So we have to be careful in terms of determining aggregate turnover either for registration or for composition dealer. Now going further, which is exemption. An exemption is very important for understanding sake. When the 4-tier rate is being prescribed, 5%, 12%, 18% and 28% and 28% were set, it was also stated there would be one category which would be 0 rated or exempted category. And therein 50% of CPI products, consumer price index products, going to fall, on which GST is not going to be applicable. This is the one. But just to understand a better way, today more than 247 products are excise exempted, central excise exempted, and more than 100 products are VAT exempted. Now these are divergent way of exemption practice followed in existing indirect taxes. Now question comes, what will happen whether these products either exempted under central excise or exempted in VAT will continue post GST? Answer is no. Government going to make unified list. Unified list I am referring to for exemption of goods and services, and it is being stated number of times by the government officials that they are going to prune this list and to make it around 100 products. That is what the first part. If you come to service tax scenario, there are certain things which is excluded from service definition, like what are excluded: transfer of property in goods or immovable property by way of sale, gift or any other manner, deemed sale of goods, transaction in money or actionable claim. I am just highlighting actionable claim and will leaving it for Batraji the definition of goods and services. Now actionable claim is included within the definition of goods. Today no service tax applicable on actionable claim. Employee providing services to the employer in the course of employment. What happened? Employer providing services to the employee concerned? This needs to be looked into. And why I am highlighting? Because there are exclusions, specific exclusion from service definition or any fees taken in tribunal or court. Excluded from service definition, negative list or mega exemption notification 25/2012. So these all are exempted. What happened? whether these exemption, negative list, exclusion from service definitions will continue post GST. No way. I would like to highlight healthcare services. Healthcare services today exempted, whether provided by government bodies or provided by private business entities. But if you go back to Schedule 4, activities undertaken by central government, state government or local authority, it is neither a supply of goods nor supply of services. So healthcare and education is provided in that particular list, meaning thereby healthcare services provided by government, central government, state government or local authority, then GST not applicable. But meaning coming out, it means whether GST applicable on healthcare services provided by private business body. Looks like yes, that's what looks like. But now there will be unified list. There will not be like negative list, mega exemption list and state specific exemption list continue. Unified list for exemption either for goods or for services. This was on pertaining to different exemptions prevailing for goods and service taxability. Second point. Today we enjoy SSI exemption for manufacturers up to 1.5 crore. We enjoy threshold registration amount for VAT chargeability 5 lakh to 20 lakh rupees. Under service tax 10 lakh rupees, but I have said now this aggregate turnover would be 20 lakh rupees, 10 lakh rupees for northeastern states including hilly states. Now there will be common threshold 20 lakh rupees. So what happened if you are SSI manufacturer today enjoying excise exemption, tomorrow you will be coming under GST net. So transition provision again going to be applicable, for which I am leaving it to Batraji. He will delve with. If you are not excise registered and you are enjoying SSI exemption, having stock on appointed date, what happened for the credit taxes excise duty paid on inputs lying on appointed date. So this is the second component. Coming to the important section 11, which talks about exemption provision. And what section 11 says, central government and state government can notify any specified goods and services either absolutely exempted or conditionally exempted. Now we have to understand the meaning of absolute exemption and conditional exemption. Absolute exemption means it is absolutely exempted with no condition. Meaning thereby, if such specified goods or services notified by central government or state government, then in that case, SSC has to avail compulsorily exemption. He cannot charge GST. You will be recalling section 5A, subsection 1A of Central Excise Act 1944. Same provision is being replicated for absolute exemption. If a particular goods and services absolutely exempted, then SSC has no choice other than to avail exemption. If it is conditionally exempted, in that case SSC is having options either to avail exemption or to charge taxes. But you know what is conditional exemption? Just being a service tax SSC, you must be knowing notification number 26/2012, abatement notification. Abatement notification is like a conditional exemption notification. For construction, 30% taxable, and there are two conditions attached. Value of land needs to be included and no credit on input. Meaning thereby credit available on input service and capital goods. So these two conditions need to be complied with if at all you want to levy service tax at a rate of 30% as provided in notification number 26/2012. When I am saying so, then there would be two lists to my knowledge. One would be absolute exemption and one would be conditionally exempted. In case of conditional exemption, of course, it is at the option of SSC, and as decided by number of Supreme Court judgments, that it is not compulsorily. In that case, SSC may avail those conditional exemptions, or they can go for as a normal supplier, pay full tax and avail full credit. That is what the option all about. Now when I'm discussing exemption, it is very important to understand what happens for a particular good and services not chargeable to GST at all. That would be called non-taxable goods or services. What could be non-taxable goods or services? Right now, alcoholic liquor for human consumption is a non-taxable good. So there would be list of non-taxable goods or services, exemption, absolute or conditional. Subsequently, Section 11, subsection 2 says, even the central government and state government can pass orders from payment of taxes to provide exemption on specified goods and services. Third one is very, very important, and I would like to highlight for all the viewers, Section 11, subsection 3. Now what it talks about? It talks about an explanation can be inserted in exemption notification with retrospective date. I must reiterate, with retrospective date from the issuance of notification, date of issuance of notification. Just try to understand, and let me take one example for easy understanding. Let's say particular notification comes on 1st January, and now an explanation inserted from 1st August of a particular year. You may have availed exemption on your interpretation, but explanation inserted from 1st August, which is applicable retrospectively from 1st January, would be subjected for all of us together. You have availed exemption, but that explanation going contrary with the interpretation assumed by all of us together. So question comes, why retrospective insertion of an explanation, that too from date of issue of notification? This is only going to increase the litigation for all of us together. And being from ICAI platform, IDT committee, we are representing such issues. And here it is important for all of us, while we are watching all the webcasts, we should also summarize such points, feedback, suggestions to be given to the IDT committee, which can be forwarded to the Government of India. This is what all pertaining to exemption. Now again I am requesting Sri Batraji to deliberate further with observation and corresponding transition provision.
Thank you, Bimalji. Bimalji has rightly explained you Section 11, which gives power to grant exemption. But in case we look at the exemptions which are clearly apparent from the law, he has rightly stated goods which are outside the ambit of GST, like alcoholic liquor for human consumption, 5 petroleum products which is already listed. Those are the things which are clearly outside the GST. Then we have to look at the exemptions. As he has stated, it is likely to be proven, fine enough, but now they have inserted in the revised GST model law a Schedule 3, which is neither being treated as a goods or as a supply of service. So this schedule has already given some exemptions, absolutely, and those are 5 in total. First is services by an employee to the employer in the course of or in relation to his employment. Then it talks about services by any court or tribunal established under any law for the time being enforced. And then Schedule 3 contains 3 sub-clauses. Practically these are exemptions given to the Member of Parliament, other statutory posts, etc. Then comes services by a foreign diplomatic mission in India, and then services of funeral, burial, crematory or mortuary. So these are already exemptions which has been allowed in this law. Besides that, there can be exemption list, as Bimalji was saying. So we have to wait and watch what kind of goods and services remains to be exempted. Of course, the exemption list will not be as long as presently, as he has rightly pointed out. Then if we go to Schedule 4, we find that the transactions entered by the central government, state government and local authorities, there are certain transactions listed in that schedule which shall neither be treated as supply of goods or services. So another exemption has already been granted to the central government. Now, any person who is making outward supplies, he is entitled to be registered compulsorily in terms of Schedule 5. Then let us understand what is outward supply. Mr. Bimal Jain has already tried to explain you. I just want to focus on one aspect, that there are two criteria. If the location of the supplier and the place of supply is within the same state, is an intrastate transaction. If the location of the supplier and place of supply is in a different state, then it is an interstate transaction. So in case you are engaged into second kind of category, then you are out of this exemption limit. And then the exemption limit is already available for 20 lakh rupees for all goods and services combined together by one person having the same PAN. Even if he is having 5 units, it has to be calculated PAN India, and 10 lakh for specified states. So those are also exempted from this. So I think with regard to exemption, I have to explain this only, and then we can move to the transitional provisions. Friends, so far as transitional provisions are concerned, you will appreciate that they have been contained in chapter 27 and ranging section from 165 to 197. There are 33 sections, and we have been directed or advised or suggested, whatever you may say, that we have to deal with the transitional provisions which are in relation to levy, composition and exemption only. Looking to this aspect, 172, which deals with the composition dealer, I have already dealt with. In summary manner, I will once again repeat, if I am shifting from composition to regular rate, I am entitled to take credit of goods, that is inputs or inputs containing semi-finished or finished goods, immediately prior to the date when I am shifting to the regular section. And similarly, once I am shifting from the regular section to the composition scheme, logically also I am not entitled, I have to reverse the credit which is there on the 3 element inputs containing semi-finished and semi-finished goods, and if at all some credit remains, that has to be discarded. It cannot be carried forward. Very logical. Now I will come to some of the sections. Firstly, I would like to deal with section 169, which is contained in section 172, read with section 18(3). A registered taxable person who was either, this I have already dealt with. Now I go to section 169, which says a registered taxable person who was not liable to be registered under the earlier law. Who are those persons? That means those who are having the turnover below the exemption limit, who was engaged in the manufacture of exempted goods or provision of exempted service. That means those services which were earlier on exempted has become taxable in the GST era, providing exempted work contract service and availing benefit of abatement under notification number 26/2012, first stage dealer, second stage dealer or registered importer. This entry in section 169 is really important because it has absolutely made clear there was a doubt in the minds of the professionals that whether the FSD who simply pass on the credit can also be liable to get the benefit of the stock, because they are not the manufacturers, whether they will get the benefit of the stock which was there prior to the appointed date. So this section has made it clear, absolutely, they all shall be entitled to take credit in the electronic credit register of eligible duties and taxes, which has been specified later on in this section. And again, the credit is available on the inputs contained in the semi-finished goods and finished goods. And these credits are subject to the following conditions. Number 1, such inputs and or goods are used or intended to be used for making taxable supplies under this Act. This Act means GST law. So obviously, if the supply remains exempted under GST and it was exempted under the earlier law, there is no question of any credit being allowed to you. So the credit will be allowed if the supplies are taxable under GST. Said taxable person on the benefit of such credit by way of reduced price to the recipient. That person must pass on the benefit of that credit to the customers, and then registered taxable person is eligible for input tax credit on such input under this Act. Let me tell you, of course, input tax credit is not my topic and not our topic, rather I should say, for the day, but the fact remains the credit will be available only when it is available under the earlier law as well as the GST law. Then he should be in the possession of invoice or other prescribed document evidencing payment of duty under the earlier law in respect of such inputs, and such invoices are not earlier than 12 months. And last condition is really important. It says supplier of services is not eligible for any abatement under this Act. Meaning thereby, there is a likelihood that there is an abatement scheme for certain services, and of course the definition of work contract, the way it has been amended from the old GST model law to the new model law makes it absolutely clear. Earlier on it was in relation to movable and immovable property both. Now it is only in relation to immovable property. It makes a great sense to appreciate that only these work contracts which has been specified in this work contract definition will alone be not taxable under GST. Even other work contracts which are not being covered here, not being in the nature of construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, and now being added building, fabrication, etc. Those work contracts will continue to be taxable, but for these purpose of work contract, maybe under reverse charge it may come, or maybe they come out with a scheme which is applicable to these work contracts, and this particularly this clause absolutely makes it clear for any abatement under this Act. And then further, for the purpose of those dealers who have been dealing with the products which are being dealt by the manufacturer or maybe the first stage dealer, would have been into real difficult situation in case they would not have been allowed the credit of excise duty paid on the material which was there in the stock. I'll just explain it with an example. Let us say I am a trader. I am registered only under VAT law, and I have purchased material worth ₹100, say a piece of, it is a paper product, and 5% VAT is being levied there. So according to the section 163/64, if I am being allowed only credit of the taxes which are being involved on the invoices, then I would have got the credit of ₹5 only. And because the product is ₹100 and then 10 rupees is, let us say, excise, and 5 rupees 50 paisa being the VAT thereon. I am revising the figures of the example. So 110 is my cost and 550 is the credit which will be available to me. So I cannot sell the product for less than 110. But I am competing with the first stage dealer who is having an invoice wherein the value of paper is 100 rupees, excise duty 10 and VAT is 550. So meaning thereby he was entitled to the credit of 15 rupees 50 paisa. So my goods could not have been sold at all because it was totally incompetitive. The cost of rupees 10 of excise duty, which is a cost to me and it is a adjustable credit in his hand. The government has come out with a solution in terms of provision to this section, which clearly provides that where a taxable person other than a manufacturer or supplier of service is not in possession of an invoice or any other document evidencing payment of duty in respect of input, then such taxable person shall, subject to such condition, limitation and safeguards, be allowed to take credit at the rate and in the manner prescribed. Viewers, I would like to draw your attention when the country has seen the transformation from sales tax to VAT. At that point of time, there used to be first point goods. And once the first point goods are being sold, the tax was levied at the first point and subsequent all sales were exempted. So the question came, the person who is buying the goods at the third level is not having the invoice with the tax has been shown separately, how the credit will be allowed. At that point of time also, the government came out with a solution that the product which is in stock, let us say the value is ₹100 and that product is subject to taxable at 5%. So they say you will get the credit of 100 into 5 divided by 100 plus 5 into 75%. Assuming because you may be a second buyer, you may be a third buyer. So some kind of formula will be announced in this case also, and all those traders who are registered only with the sales tax but having a stock which has suffered the excise duty will also get the credit under this section, which is a very big change, and this section was not, this provision was not there in the old model GST law. So this is section 169, which is really important. Then I would like to move directly to section 192, tax paid on goods lying with agent on the appointed date. 92 and 93, they are almost having similar language, so I will deal with them collectively. That is 192 and 193. If you look at 192, which is applicable tax paid on goods lying with agents, so this section says where any goods belonging to the principal or lying at the premises of the agent on the appointed day, the agent shall be entitled to take credit of the tax paid on such goods subject to fulfillment of the following conditions. What are those conditions? The agent is a registered taxable person. The agent with whom the goods are lying must be a registered taxable person. Both the principal and agent have declared the details of stock of goods lying with such agent on the day immediately preceding the appointed day. That means the declaration must be made by the principal as well as the agent that these are the goods I am holding on behalf of the principal. Principal says these are the goods lying with the agent which belongs to me. And then the invoice for such goods has been issued not earlier than 12 months. You will find this is a condition everywhere. And then principal has either reversed or not availed the input tax credit. So the agent will be entitled subject to these conditions. Similarly, when we talk about capital goods, these are with regard to inputs. It is a similar provision where any capital goods belonging to the principal or lying at the premises of the agent on the appointed day, the agent shall be allowed to the credit on such goods subject to conditions. And those conditions are absolutely identical, so I am not talking about this. And then section 194, which talk about treatment of branch transfer, it clearly says, notwithstanding the non-obstant clause, anything to the contrary contained in this act, any amount of input tax credit reversed prior to the appointed date shall not be admissible as branch transfer. So once we do the branch transfer, then we have to reverse the credit depending upon the state when the material has been purchased locally. Now the question is, if that material comes back to me, then I was allowed to take the credit and the reversal will have to be nullified. But now they have made it absolutely clear by virtue of this section that such transfer shall not be, that credit will not be allowed to be reversed if the goods are coming back after the appointed date. Meaning thereby, again we have to look at the volume of goods which are there and the amount of credit which is likely to be received by me simply because the goods were sent for to the branches for any purpose. So friends, now we have to look at it whether those goods have to be brought in. If that is the case, it's a huge credit, then they must be brought before the appointed date. But in case you feel that the cost of transportation and other costs will be much more than the benefit of the credit which will be available to me, then this exercise should not be taken. Now I would like to look into the time constraint to one last section, 197, which talk about transitional provision for availing standard credit in certain cases. You know, under the service tax law, when I was receiving any invoice, I was supposed to take the credit immediately in the month in which those goods and services are being received. And so far as services are concerned, the credit was being made available and I was supposed to make the payment within 3 months in terms of Rule 4 of Clause 7 of the Standard Credit Rules. And now it has been clarified, in case those goods come after that date, even that credit, after the appointed date, the credit shall be available to you. Similarly, those who are registered under centralized basis, even they have been allowed to transfer that credit now because they have to register in each state to any of the branches that credit can be transferred, because all these registrations shall be considered as distinct persons as we have already discussed in terms of section 10. Now because we are ending to 7 o'clock, if there is any query with regard to transitional provisions, we will deal with that. And now I will hand over the mic to Mr. Bimal to take up some of the queries and then rest I will take.
Okay. The first question which is raised by Mr. Govind Agarwal, and he is asking section 8 subsection 4. Okay, just going further. Section 8 subsection 4 speaks of services only. What about goods? See, section 8 subsection 4 talks about central government and state government going to notify specified services which is supplied to an e-commerce operator, and I picked up the example of Uber and Ola. When I picked up example of Uber and Ola, then these specified services are being provided to an e-commerce operator, and such e-commerce operator would be deemed supplier of service. Your question is, what about goods? If any supplier supplying goods to an e-commerce operator, then the e-commerce operator has to deduct TCS, tax collection at source, at the rate of 2% for interstate supply, 1% for intrastate supply, while payment is credited to supplier account. And supplier will get the credit of that particular amount deducted by e-commerce operator, which can be adjusted by supplier while discharging his GST liability. So to clarify you, that deemed supplier of service concept is applicable for specified services, and that is the reason definition of aggregator is being deleted in revised model GST law. It is not applicable for goods. For goods, we will continue with the e-commerce provision, TCS applicable as suggested. So e-commerce operator going to deduct TCS while payment is credited to supplier account. Supplier will be given credit which can be adjusted by supplier for discharging his GST liability. So what we have thought of, we were discussing in that odd and even question, we will take one after another. So this is the question number 2 I have taken. Request Batraji to take another query.
Now question number 3, Govind Agarwal. Section 11.1, whether retrospective exemption is possible. If you look at the language, the answer is clearly no. I am just reading the relevant lines in that particular section. The government can grant exemption by issuance of a notification on such goods and services from the whole or any part of the tax leviable thereon, with effect from the date of issue of notification or any date subsequent thereto, as may be specified. So in terms of section 11 subclause 1, the retrospective exemption notification cannot be issued.
Coming to the next question, which is asked by Mr. Surya Narayana, and his question is, at present in service tax, we have abatement in place of standard credit due to peculiarities of such service. Whether similar provision are going to be introduced in GST also? What about reverse charge provision? Are they going to be introduced in GST also? So let me answer your second question first. What about reverse charge provision? Are they going to be introduced in GST also? Answer is yes. Section 8, subsection 3 clearly provides that central government and state government can notify specified goods or services, not only services, even specified goods for reverse charge liability. And this reverse charge liability needs to be paid by recipient of specified goods or services. Now your first question was, at present in service tax we have abatement in place of standard credit due to peculiarities of such service, like abatement notification 26/2012. Or you can take example of Rule 2A works contract. Let's say construction and works contract. Construction abatement is being provided to the extent of 70%, taxable 30%, with a condition value of land needs to be included and no credit on input. Now question comes whether such kind of abatement will continue post GST. First you have to understand, now we are in GST application, GST applicable on goods and services both together. Why abatement is given under service tax provision? Because goods are being used for the provision of services. So on goods, service tax should not be chargeable. That is the reason abatement is being provided. And why value of land needs to be included, why 70% abatement is being provided, so that it is not taxable. Only taxable portion would be service portion. And that is what being considered in works contract, service portion in execution of works contract. If you look at declared service, 40% taxable, wherein the condition no credit on input, credit is available on input service and capital goods. To my knowledge, abatement kind of things will not come. Maybe a lower rate category can be provided for such peculiar services where taxability would be at a lower rate. So maybe we may have two slabs, one standard rate applicable, which may be 18% for service taxability, or maybe a lower rate 12%, but in that case, whatever taxes paid on input and input services, credit would be available. So there is no question of abatement because corresponding credit is being given to you. This would be my answer.
I would like just draw your attention to section 169 where they're talking about the abatement. I don't know what is going to happen. So anyway, I am coming to question 1 which we have inadvertently left. That is by Bimal Parak, which he says, if a person has place of supply in Delhi having taxable services CA profession from which gross receipts are 12 lakh and he also owns a flat at Jaipur from which he is deriving income from rent, that is 2 lakh rupees per annum, how he can claim exemption if he continues with registration under GST regime in Delhi, then he is required to take registration in Jaipur also. If we talk about this 2 lakh per annum and 12 lakh, it aggregates to 14 lakh, he is not liable to get himself registered first of all. And assuming this 2 lakh is 20 lakh, then the question comes from you are supposed to be registered from the place where you are supplying the goods or services. Assuming you are issuing the rent receipt from Delhi for that premises, so only the premises being there for the purpose of place where the service is provided, it can be an issue for interstate or interstate. According to my understanding, there is no problem. You can seek registration in Delhi only, and then it will be treated as the interstate supply on which you can discharge. Even if when you pay IGST, ultimately the tax has to move to the place where the services are being consumed. So the share of Rajasthan government will ultimately reach to that government. That is one my understanding. I'll request Bimal, wherever he doesn't agree, he can intervene and say his opinion also, because it is always fair to discuss all aspects of a particular query. So I'll take an example of chartered accountant also. Let us say you are having 4 offices, Delhi, Bombay, Calcutta, Madras. Then of course there is no option but to seek registration in all the 4 states, because you are issuing invoices there, having offices there. Now let us talk about a chartered accountant who is in Delhi, but he is catering to its various clients, pan-India. Do he liable to seek registration in every state? According to my understanding, no, because he is having his office in Delhi. His clients may be in Mumbai, Calcutta or anywhere in India. So as per the place of interstate supply, we have already told you location of supply and place of supply. The place of supply is on the place of recipient, the general rule. Then these supplies are in various parts of the country. So obviously you can make from Delhi either interstate invoices or intrastate depending on the transaction for the clients which are in Delhi. You are supposed to seek only one registration. This is what I personally feel.
To just supplement and add further, and let me say one bold statement that as on date, whatever we are looking, model GST law, we may have different interpretations, and that will be subjective, may vary from one professional to another professional, but we are trying to all analyze. On question number 1, I'm putting myself and creating a situation. Let's say I've got 4 immovable property in 4 different states, but I'm registered in Delhi, and this we have discussed at length together. So I'm just creating this example for understanding sake. First question comes, am I supposed to take 4 registrations because location of immovable property in 4 different states? This was a question. Now why this question came? This question came from the concept of registration. Registration is required in the state where from I'm supplying services. So there are 2 schools of thought. The one school thought, location of immovable property, which is place of supply provision, may be applicable for taking registration. Another school of thought, they are thinking, why I need 4 registration? I need not require to have 4 registration. I may continue with daily registration and I need not require 4 registration. But let me tell you the advantage and disadvantage of this particular criteria. If I don't take 4 registration, then what happens? any kind of input and input services procured pertaining to those immovable properties located in different states, then that credit will not be available. Let's say you got property in Karnataka and you are procuring local input and input services, then supplier must be charging CGST and Karnataka SGST. If you don't take registration in Karnataka, in that case what happens? You are not entitled to avail Karnataka SGST credit in Delhi registration. This is the first question. And second question came, what happened to CGST component? It is going to be state specific. If you look at the provision today in GST return, it is state specific. So if you are not taking registration in Karnataka, then neither you can take CGST credit nor you can take Karnataka SGST credit in Delhi registration. This is one way to look at. If you take registration in Karnataka, then corresponding credit would be available, but problem. 4 registration, 4 compliances. So you have to look at your business aspect. Are you really willing to have 4 registration? Otherwise, technically, 4 registration not required. You can continue with your daily registration. Only you will lose out corresponding credit charged by input and input suppliers in respective states. So business model need to be looked into. So GST is not only biggest indirect tax reform, I am saying it's the biggest business reform.
I would like to further supplement it and take an example. Let us say you are a work contractor and you are having work contracts in various states wherein you are executing those civil contracts. Now, because work contract being a service, is there a possibility that I take one registration in Delhi and for all those 4 projects, I can issue an invoice wherein I will charge interstate or interstate for the contract executed in Delhi? Legally, it is quite possible. But if you look at the practical aspect of it, as Bimalji was saying, if I does that, then for the purpose of execution of the contract in other states, let us say Rajasthan, if I am procuring certain goods and services where they are charging the Rajasthan state GST, certainly that is going to be lost. Now the only thing is, as he rightly said, we have to compare the situation. If the credit is very minimal, I can keep on registering myself in Delhi, but in order to exhaust and in order to avail the full credit, I may seek registration, because voluntary registration is also possible. I can seek registration in all the states. In that case, this loss of credit will never arise.
Thank you. Yeah. Yeah. Next, Atulji, you want to please? Yeah, please take. Yeah. Okay. Let's question number 5.
A manufacturer from an SEZ in Karnataka exports the goods to a company in UK. The buyer in UK markets it across the world and sells them under its name, including for India. The buyer has a subsidiary in India which markets the goods in India. The manufacturer sells under BOE for home consumption directly to Indian subsidiary for buyer in Maharashtra, but invoice to UK entity. I believe, sir, that as a because this will be a fact-specific query. My only submission to you, as maybe discussed by Ashok Batraji and Bimal Jain, that when we are talking about the export of services vis-a-vis the place of supply or the place of provision, the same rules which were there in the place of provision for the purpose of earning the consultancy or vis-a-vis the intermediary services, the same rule is there in the case of a GST as a place of supply, and the section 10 of IGST is there which is dealing with this, section 10 subsection 8. So based on the section 10 provisions, we have to see based on the facts whether it will be subject to the exports, whether it will be subject to or it will be a domestic, and then in case of a domestic, whether it will be an intrastate or an interstate. Coming to the question number 6.
Just to supplement what Atulji has said, Mr. Syam Nuri, your question was whether this transaction is a interstate or intrastate, and Atulji has rightly said that these are all factual based queries. But just to highlight for all of you, section 3 has got specific provision. When supply is being made to or by SEZ developer or SEZ unit, will always be considered interstate supply of goods or supply of services. If it is interstate supply of goods, then we have to go back to the provision of section 7, which talks about place of supply for goods, and then if services, then we have to look at domestic transaction. But if it is import and export, which Atulji has also said, we have to really understand and appreciate this factual driven queries are dependent upon clarity, whether you are talking about SEZ pertaining to or independent of SEZ pertaining to. If it is not SEZ, then it would be either import or export, and he has rightly said in case of export and import of services, section 10 would be applicable. Okay, next. Question 6, you will take? No, please. Section 6, talking about levy, and this question starts, how government will determine in which state the product is being consumed. It's very simple, B2B and B2C. Let's say I'm in Delhi and I'm registered in Delhi. I'm raising B2C invoices. B2C invoices meaning thereby one registered PIN to a consumer. It is always implied that goods are being consumed within the state of Delhi. Then SDSC component will go to Delhi. If it is B2B invoices, let's say from Delhi, and I'm raising invoice to Gurgaon based client, and as per place of supply, it is interstate, which are making, we have to really look at not only B2B can happen within Delhi as well, but it needs to be looked into subsequent transaction after B2B. If it is B2C, then ultimately consumed in Delhi. So my only point which I wanted to draw, we have to really look at our B2B and B2C invoices, and accordingly we have to determine. Just to highlight one example, I'm daily registered raising B2B invoices, and recipient is in Gurgaon. So let's say chartered accountant giving services to a client, then it's a B2B invoices, then location of recipient, then it is going back to Gurgaon only. If it is being consumed in Gurgaon, then in that case, SDSC component will go to Haryana state. That would be my answer.
But I'll just add, your question is how government will determine in which state the product is being consumed. There is no need for that. The only thing is, if it is being consumed, there cannot be any further sale. So obviously, once there is no further sale, the tax will go to the state where the last transaction has taken place, in simple terms. Then, what is the value to be taken for charge of interstate stock transfer? If you look at section 15 and if you look at the charging section, they are talking about and giving reference to section 15, which says on the transactional value if the provider and recipient are unrelated. So the only thing is, with regard to stock transfer, we are looking at the valuation rules. Once they will be notified, then only we can say. But looking to the present scenario, because all supplies are subject to section 15, so it should be also at the transactional value. Mr.
Sir, coming to the next question from Mr. Subhashish Banerjee, incidental expenses incurred by the recipient of service. Sir, I just wish to clarify you, there is a valuation provision which says, earlier there was a valuation rules also that which says that even if you are not charging, if you are providing any services and there is no consideration, then also the same will be included, that is section 15 is there. And as per the section 15, if the accommodation or food so provided free of cost to the auditor, certainly there will be levy and there will be the requirement to add the value into the services, into the value which is being billed by the auditor to the client. Coming to the ninth question, over to Bimal Jain.
Ninth question is asked by Mr. S. Bhattacharya, and he's asking, is GST a tax on value addition scenario for direct supplies from vendor to customer against EPC contract between unrelated buyer and seller? If transaction value of sale is lower than the transaction value of purchase, there is no value addition in the transaction. In such case, you must be knowing certain VAT provisions. We have to really wait for GST credit rules to come into the picture. Wherever your sale price is less than purchase price, maybe your credit would be restricted to the extent of sell price. That's what the provision is. You got similar provision under state VAT provision. So I'm only saying that GST as explained is on value addition. So if I purchase is 100 rupees and I'm charging 150 rupees, I have to discharge on value addition of 50 rupees. But as against purchase of 100 rupees, I'm charging 50 rupees, then my credit would be denied to the extent of 50 rupees or restricted only to the extent of 50 rupees.
I'll just supplement it. If you look at DVAC, section 9 clearly talk about that you will be allowed the ITC to the value of sale price if your sale price is less than the purchase price. But if you look at the central law, there is no such restriction, and technically there should not be, because the government is entitled to collect the tax on the sale price. And if you look transactional value of sale price, whatever you may call it, if you look at from that logic, I am buying the goods at 10 rupees because of some reason quality goes down or there is some deficiency. I am selling at 9, the tax should be only at 9. But of course, this provision was there for so many years in Delhi, then they restricted. But if you look at the central law, there is no such restriction. According to my understanding, that should not be there in GST. But of course, as Bimal ji rightly said, we have to look at the rules for that purpose. Now, the next question number 10, which is from Mihir, whether separate registration has to be taken for each office in same state. If you look at the registration procedure, then they say if you had a business vertical, which has been defined in the law, if there are two business verticals, then you may go for the two registration. Otherwise, one single registration in one state will do.
Sir, coming to the question number 11, that is by again Subhashish Banerjee, any specific rule for related party transaction as far as point of taxation? Dear friend, as far as point of taxation is concerned, there is no a specific rule right now for the related party transaction. I believe that you are talking about the associated enterprises which were there in the service tax provision. But right now, there is no specific provision as prescribed for the GST is concerned. Coming to the question number 12, with the permission of Batraji, what is the benefit of separate registration of different business verticals? I believe that it is purely a commercial in nature, rather than we are saying separate registration will offer you a lot of compliances requirements. So in case within a state you are taking a lot of maybe 2-3 registration, that will give you a lot of compliances. But for the vertical wise, it is only that the commercial aspect which you have to see that while taking this kind of a registration. But they use the word may rather than the word shall for obtaining this different vertical registration.
I just want to supplement, rather taking a separate registration of business verticals, and if you look at section 10, if I am being registered for more than one places and I have got two registrations in the same state, then such supply from one depot to another will also be taxable. Let us take an example of Haryana. I am having two showrooms, one in Karnal, another in Rohtak. And then if I am taking two registrations, then the material which will be supplied from Karnal to Rohtak will certainly be subject to CGST, SGST. Of course, the credit will be available, but the timing difference will be there. The material which I am transferring today, maybe I am able to sell after 3 months, then that kind of money will be blocked. But why I should seek registration? Let us say there is a person who is having a particular brand name which he has created for him. He has got two sons. He wants that trademark should be availed by both the sons. One is interested in ready-made garment, another electronic goods. So obviously there is not likely to be any transfer between the two. They want to keep separate accounts, so they can have separate registration in that scenario.
Just to add further what Sri Atulji and Batraji has said, self-supply stock transfer, of course CGST, SGST, but chargeable on transaction value. This point. And second point, Mr. Subhashish Banerjee asked reverse charge mechanism. RCM specifically he has said that for time of supply for services, if you go under section 13 of model GST law, of course specific provisions are there, and this provision says that date of debit or date of making payment, whichever is earlier for associated enterprises. Otherwise, reverse charge, time of supply, which is point of taxation for services, could be date of payment, or date following the end of 60 days from date of issuance of invoice would be the POT provision, which is time of supply provision for services.
Question number 13, Shashi Kumar. Sir, whether FOC transaction VW unrelated part between unrelated parties to be included in annual, I think, aggregate value. even under GST. So I think your question is whether FOC transaction between unrelated parties to be included in the value for the purpose of discharge of GST liability. If my facts are clear, I am answering this query on that presumption. Kindly appreciate it is on the transactional value, and now if any material has been supplied which is supposed to be supplied by the provider and then it has been supplied by the recipient, so we have to wait for the rule, according to me, should be subject to tax.
Okay, going to next question, Mr. Ajay Kumar Gupta, compulsory registration. Does compulsory registration means compulsory levy and payment of GST even if threshold not crossed, or could it just entail reporting of transaction? Compulsory registration definitely means compulsory levy and payment of GST and all other compliances as need to be made in modern GST law.
Subject to tax credit also. Once you are liable to pay, then of course you are this tax credit shall also be available. Then Nitika Agarwal, why supply of non-taxable goods are outside the composition scheme? Why supply of non-taxable goods are outside? Once they are not taxable, they should not attract any tax. That can be the simple reply.
Maybe she is looking for why specifically non-taxable goods are excluded from composition. Otherwise, answer is coming out if it is not taxable at all, with a question of taking composition registration. Yes, please.
Next question, Harish Chandwani. How to identify my supplier oblique customer based upon GST-IN? Once he is issuing an invoice which contains your name, the question of identification will never arise. And if you look at the mechanism of filing the return, on 10th you are supposed to file your outward supplies. So once it is an outward supply from Mr. A, so it will be auto-populated in your register on 15th. That is the inward supply. So according to me, there is no need to identify. It will automatically be identified by the system looking to the invoices and the information which has to be supplied in that return form.
Mr. V. Ramdas, he is asking, can an individual work contract be termed composite supply? In Koni case, it was decided that a lift contract is a works contract. Will it not continue to works contract under GST? Then that is what I have raised. AC, supply of AC along with the installation and commissioning. Of course, it's a works contract. It's a supply of service, but it becomes now composite supply because two or more supplies clubbed together. Whether it's naturally bundled or not naturally bundled needs to be looked into. If it is naturally bundled, like say you go for AC restaurant. For AC restaurant, goods and services, both are being clubbed together, but intention is to get the restaurant services. Then in that case, supply of service and GST rate as applicable for service contract would be applicable. But when you take AC along with erection, installation and commissioning, your intention is not to get erection, installation and commissioning. Your intention is to get AC in running condition. So naturally bundled and not naturally bundled going to play a very important role, though these are works contract, and that is the reason I have highlighted that works contract, which is a dispute persists for a long time. Even in Koni elevator case, three-member bench judgment overruled by 5-member bench, now with a kind of composite supply, mixed supply given, and we have to evaluate such works contract is again going to be subjective issue, and divergent interpretation may be arise from different professionals.
Bimal ji has rightly said divergent view. I slightly beg to differ here with Mr. Bimal Jain, my dear brother. Kindly appreciate, work contract has been defined as a service only, one single service. So if it is a composite indivisible contract, it is a service only. The concept of composite supply or mixed supply will come when there are more than one service or when there is more than one supply of goods or services. I'll give you an example. Let us say there is a shirt which is liable to be taxed at 12% and there is an expensive pen which is liable to be taxed at 18% under GST. If I say I am a very smart businessman, both the goods are costing me 2,000 rupees, I say I am selling shirt and pen is given free, then am I liable to be taxed at 12%? The department may say that you are selling pen in the guise of selling shirt. So once these kind of unnatural bundle things are there, mixed supply, they have rightly said it will be taxable at full rate. When it comes to two services. For example, when you travel by air, you take service of transportation of passengers. And let us say it's a Vistara or Air India or Premium Airlines, where the food is also being given free to you. Can you say the cost of food shall not be added into the cost of service? I'll here quote Supreme Court judgment of IDM World Communication 2013 case, where an individual SIM card given to the subscriber was added to the value of services because the court was of the view that it is a bare minimum service, and in fact, if you bare minimum service was the provision of telecommunication service, that company paid VAT. They said in case you have paid VAT to the wrong government, you cannot deny the right government to collect the service tax on that, and you have to claim refund from the VAT department. This is what the judgment was. So of course, now that is the reason that work contract has been treated as a single service. This is my observation. Coming to next, Vikas Borat, please give example using composite scheme transaction should be between states. If it is a composition scheme, there cannot be any outward supply. If any outward supply is there, you are out of composition. The only thing is you are being permitted to make inward supply. Meaning that I will give you an example which is contrary to what the presently is being done by the VAT authorities. But under GST, I will give you an example. Let us say I am a dealer. If my turnover is 20 lakh, I make outward supply of 500 rupees from Delhi to Haryana. So the day I make a outward supply, I become liable to seek registration, and within 30 days I have to make an application. But let us assume the same trader keep on selling the goods within Delhi, but he makes some purchases from Haryana for his customer in Delhi, because inward supply is not being added, he can still enjoy the benefit of composition scheme till his turnover reaches 50 lakh.
Yeah, coming to Mr. Subroto Roy and Section 3, and this is what the answer I want to give. And I would just supplement what Batraji has said, not supplement, just I'm saying that this kind of planning would be required for treatment of works contract post GST. And what you're saying for works contract, part of EPC given by customer to same vendor, can supply of steel and cement be separated as supply of goods for GST at lower rate, and the pure service portion of the civil works can be taken as a supply of service? To my considered view, of course, this needs to be. Otherwise, if you really mix up two or more supplies, one is supply of goods, one is supply of services, and then we have to go back to the major intention test. What is your intention? You want to buy goods or you want to buy services? And then you have to apply the GST rate. So to my considered knowledge, again the works contract, which is subjective. Now if you go to works contract definition, it says transfer of property in goods. Right, transfer of property in goods, and the concept of in same or otherwise form is not there. Transfer of property in goods and includes, then 14 terms are being prescribed and related to immovable property. So I'm only saying that works contract, of course, material and service portion is there. So the example which I took the AC along with installation and commissioning. And then I have discussed with the composite supply, because in that case, my dominant intention is to buy AC in running condition. My intention is not to buy erection, commissioning and installation. So if you treat the same as a works contract, will always have interpretive different divergent view. To my considered view, now we have to bifurcate such contract, supply of AC as a supply of goods and erection, commissioning, installation as a supply of service. So if AC is chargeable to 28%, then that is 28% for AC valuation, and 18% applicable for erection, commissioning, installation, then 18% going to be applicable for supply of service contract.
I will just supplement it here. I will take his example only. If I am in Delhi, I am buying a AC from a person, and I ask him, I will pay you a specified sum of 30,000. This AC has to be installed in my premises. Then it is an indivisible composite contract, and it has been held by the Supreme Court. If one part of the contract can be executed without executing the other one, that is not a indivisible, it's a divisible contract. So once it is an indivisible contract, then certainly it is a service, because work contract definition, as Bimal ji has said, clearly says Work contract means a contract where there is a transfer of property and goods leviable to tax the sale of goods. Now, of course, the sale of goods is not there. After GST, it will not be there. So, transfer of property and goods in any form. So, once this transaction of 30,000 is there, it should be subject to tax at 28% if AC is at 28%. Now, let us assume another case. I have come from Gurgaon. I take a air conditioner from Delhi dealer, and then he raises me an invoice of 28,000. It is an interstate supply. Under the terms of agreement, I ask him to deliver that AC to my residence in Faridabad. Then I contact another person to install that AC, and he charges me 2,000. In that case, these are two independent supplies. So, these being independent supplies, the AC will be taxable at 28%, and whatever amount is being charged by the local vendor for installation, that will be subject to tax at 18%. Even in the course of installation, he must be using certain materials, maybe plywood, maybe nails, and maybe other things. So, according to my understanding, we have to look at it if it is the individual work contract. When we are talking about the construction contract for which the query is there, kindly appreciate, can there be not a provision where the whole material has been supplied by the contractor and you have been asked to provide only the construction services? The only thing is, the terms of the agreement has to be read as a whole, and it has to be very, very clear that it is not an indivisible contract. For example, when I am supplying the goods, then the ownership of goods has been transferred to the contractee, and then if anything happens to those goods, they are being theft or damaged, then the loss is on his account. The insurance for the period when I am constructing has to be borne by him. So once I am supplying the goods independently under a contract, then those goods have been made available to me. So I may provide only labor services and the whole material has been supplied by him. Forget about supply by me. He may acquire those materials from any other person also. So we have to look at the nature of the contract. If it is indivisible, I am very confident it will remain a service only. But if it is a divisible contract, then certainly the goods and services has to be taxed separately. There is no need that I may go for the same person. If I take the example of AC further, if I am buying AC from Mr. A from the Rajouri Garden, and then I am living in Lajpat Nagar, so I call a local vendor to install that AC. There is no problem because these are two independent transactions. So the person who is installing the AC will charge me service tax at the rate services are applicable, and the Lajpat Nagar dealer will charge me 28% of that AC.
Coming for only point I wanted to draw here, that in case we are getting, I'm a supplier of AC and I'm being asked to do installation and commissioning.
Composite.
So it's a composite contract. That is the point I have raised. Please pay attention. In that case, 28%
absolutely, absolutely, no doubt about that. Now, next question, Animesh Gupta, whether a dealer in UP purchases goods from Punjab is required to get registered under GST without any limit of rupees 20 lakh turnover. We have always been telling you it's aggregate turnover, not the value of inward supplies. So according to my understanding, no.
Okay, coming to the next question asked by Mr. G.K. Sureka. If I am in Gujarat, sell goods to a party in Mumbai, then place of supply shall be Mumbai, where movement comes to its end. Am I liable to be registered as taxable person in Gujarat or Maharashtra? You will continue to take registration in Gujarat. Only you will charge IGST in this case because location of supply is Gujarat and place of supply where the movement ends, IGST applicable. So your registration would be in Gujarat.
I fully agree with him. Animesh Gupta, whether a dealer in UP purchases goods from Punjab is required to get registered under GST without any limit of 20%. I think the problem is coming, these kind of questions are coming time and again, because under the present VAT laws, in case you make any interstate purchase, even then if you are a seller, you are a dealer, of course not for the personal consumption, then you are liable to be registered because in the case of interstate purchase or sale, the taxable quantum is nil. But now under GST, they have made it clear in the composition scheme that it is the outward supply. So where the station is concerned, they said your turnover must exceed 20 lakhs. So according to my understanding, if the station rules put some restriction, fine, otherwise I have already given the answer.
Mr. Ajay Kumar Gupta asking question on interstate supply. If a location of supplier and place of supply is in same state, transaction is defined as intrastate supply. Does this mean that goods supplied by a supplier in Delhi to a recipient in Delhi but routed through Uttar Pradesh would be defined as an interstate supply? If goods involves movement of goods and movement ends That would be the place of supply. So location of supply Delhi, place of supply again Delhi, where movements end. In that case, CGST and SGST applicable and continue to be intrastate, even though routed through UP.
Bhaskar, what is the exemption limit for gold ornament manufacturer? Whether 20 lakh threshold is applicable for gold manufacturers or lead dealers? Right now, it appears to be so because they say 20 lakh, it is the aggregate turnover which includes manufactured goods also, trading goods also, and taxable goods also. So according to me, it is 20 lakh only.
Now, there is another question asked by CA Avish Kumar Jain, and it is on transition issue in case of credit in the books of accounts against capital goods. Same is not required to be shown in DVAT return, meaning thereby the balance portion which is to be availed in subsequent years. How we avail the credit in first return of GST. So, they have provided wherever unavailed credit on capital goods, that will be available to you, provided you have taken the first component. Let's say in central excise and service tax, 50% the year of purchase, 50% in subsequent year. So 50% of credit availed, but 50% is not showing in the return because that is not availed. That kind of credit would be available as provided in the transition provision.
So already section 168, you can go through it. Tata Shivani, her question is, can you please specify the cases or example of subsidies provided other than by the government? Very interesting question. Subsidy can be provided by anyone. There is no requirement that subsidy should come only from the government. I may be an NGO providing a subsidy to promote some business, to promote some sale of certain products. There can be n number of examples. Let us say I am into a NGO for energy conservation. I say if you buy a solar cooker, we will give you an energy, we will give you a subsidy for solar cooker. You can come. It need not necessarily come from the government.
I can give you one example. Let's say Rotary or Lions Club giving subsidy for the provision of services. Then that subsidy needs to be included. That is what the meaning all about. Otherwise, by central and state government. Yes, sir.
Next question, 27. Shefali Gilderwal. It mentioned that composition is not allowed if the dealer makes any supply of goods which are not liable to tax under this act. Does it mean that if I make any single rupee supply of a non-GST good under same PAN in any state, I will not be eligible for composition? Secondly, if I make any interstate supply after getting permission of composition, will I be automatically out of this scheme or the PO will take an action? First of all, I would like to reply to your later part. There is no doubt. Once you make a interstate supply, you are out of composition. Then as per the transitional provisions, whatever stock you are having, you will get the credit and then you have to discharge under the regular section. Coming to your first part of the query, if a dealer makes any supply of goods which are not liable to tax. If we talk about not liable to tax, what does it mean? Is it outside the ambit of GST or is it exempted under the GST? So according to my understanding, if it is taxable exemption has been granted and you are dealing with the taxable goods, so long as your transaction goes up to 50 lakhs, you can avail the composition scheme, there is no doubt about that.
Next question asked by Mr. Animesh Gupta, which is already being answered. So I am taking another query of Mr. Bhaskar. Currently, spectacles are not coming under excise purview. Post GST, if this product comes covered under GST, stock held on appointed day, whether credit is eligible for dealers and manufacturer, answer is yes. You can run through section 169 of model GST law.
Which we have already discussed in detail. Now Nilesh is asking me, final goods and services exempted and inward supplies are taxable. Whether government will give refund of credit available on inward supplies. If you talk about refund under GST, that is being allowed only in two situations. One, it is a zero rated supply, that is exports. And secondly, when there is a difference between the inverted structure of the duty. Meaning thereby, I am selling a product which is liable to be taxed, let us say at the rate of 12%. And the consumption of material is only 70. But the raw material which I am using for the manufacture of that product is liable to be taxed at 18%. So as a result of which, even if my consumption material may be 70 or 80%, certainly my credit will be more as compared to my outward liability. in that case you will get the refund. These are the only two situations when you can claim refund under GST.
So what Sri Batraji has said, inverted duty structure, refund would be permissible. Coming to Mr. Praveen asking what should be the exemption for specified areas like Himachal Pradesh, Baddi, manufacturing facility. These areas are excise exempted today, and they are really looking into some kind of clarity from the government side whether excise exemption will continue post GST. If these exemptions continue post GST, then credit chain breaks. So GST Council had their meeting in September 2016, and they have decided that such kind of exemption would be converted into refund mechanism, meaning thereby GST applicable on outward supplies, you would be collecting and depositing, and in turn government would be refunding to the extent of value addition. So with this process, you are continuing with your exemption and corresponding credit starts for buyer of goods from you.
I just want to supplement it because this is not the first time that we are moving to a different system of indirect taxes. We have seen it when we shifted from sales tax to VAT. The exemption which is on the ad valorem part, of course Bimal has done it. There may be a situation where I am being given an exemption on the value of investment made by me in that venture. Let us say I have installed certain plant and machinery, and as per the formula given by the state government or central government, the exemption value was 2 crore rupees. So now this 2 crore shall be treated as a refund to me, and whatever is my GST liability, that will be adjusted against that 2 crore rupees, and the moment it is exhausted, I have to comply with the GST law. Next question is from Parveen. What should be the impact of pharma industry manufacturers like model of distributor, model through CSA? Kindly appreciate under GST, transaction between two parties is one part. There is a privity of contract. For example, I will draw your attention to section 7 of clause 3, where they are saying if you are transferring the material, that is built to ship to model or sale during transit, even you to sale. Again, these are being considered as two transactions. One, and the place of providing the goods and services shall be the location of the third person. So coming to your case, in your case also, whatever is the distribution channel, every time you have to charge the tax. If the dealer is within Delhi, intrastate; if it is outside Delhi, then interstate, and subsequently he will make sale to another dealer, retailer, he will continue the same formula. So it will continue. According to me, there is no such problem, and there is no provision which is contrary to what we are doing today.
ICAI Durgapur is asking question, since petroleum product is out of GST, should the GST Act continue? That might be the query. Petroleum product is out of GST, meaning thereby central excise slide entry 84, list 1 will continue, and even entry 54, list 2 item will continue, even entry 92A, which is list 1 item for interstate, will continue for petroleum product.
My humble submission to all the queries is, because these webcasts are a series of webcasts, so they should raise questions with regard to the webcast which is being raised. For example, we are dealing with levy, exemption, composition and tax credit. So the query should be that only, because you will get another opportunity where the other experts will be dealing with that. In any case, we are not now discontinuing, we are continuing with the answers.
But sir, they appreciate it. They are taking interest to post queries.
Ashok Kumar Agarwal. In case one trader is doing interstate transactions, then he needs to get registered in GST, but his annual turnover is than 20 lakhs, then does he require to charge GST on his output and file returns? Certainly, they say once it is an interstate supply, you are not eligible composition. And once, okay, your query is in case my turnover is less than 20 lakhs and I want to pay tax at a regular rate, should I be liable to get yourself registered? If you want to pay tax in the regular section, that is full rate, then if your turnover is less than 20 lakh, I don't find any provision registration. I'll ask Bimal ji, according to my understanding, you can still avail that exemption, but you are not liable to pay the tax. The liability does not arise on the interest section. Does it arise? No. According to me, no.
Mr. Rahul Butoria, suppose ex-proprietorship or partnership of company started providing service from Kolkata, within Kolkata, is not required to be registered as per the limit. Now at a later stage, X shifted the business to the state of Odisha So what will be the consequences if the clientele is now both in Kolkata and Odisha? In that case, you are giving interstate supply of services. In case of interstate supply of services, then you need to take registration, compulsory registration.
Next is from Subhashit Banerjee. Oh, sorry, this is Rahul.
Subhashit Banerjee.
Sorry, right. Explanation is always retrospective, as because explanation means it is already there since inception, and this view was held good by various courts of law, including Supreme Court. Sorry, Mr. Banerjee, I don't agree with you. Explanation, I will give you an example from Business Auxiliary Service, where an explanation was resulted, and in the case of Martin Lottery, they clearly said it will have only prospective effect, not retrospective. Explanation is always retrospective, I don't agree with that. Explanation may be to explain, and wherever it results into widening the scope of the section, it is always prospective, not retrospective.
Mr. V. Ramdos, he is saying a person who is manufacturing in one state and is selling in another state through a depot. In the second state, he is a distinct person different from the first state. His depot was not liable to be registered under excise law in the second state. Can he claim standard credit on stock line at his depot? Of course, yes, 169 is important for you to look into.
In case, next query is from Mahesh. In case of MRP product, how to deal with revised rate if earlier it was tax-free or lower rate and now to pay on higher rate for stock held on 30th June? What will happen if the excise duty rate is being increased from a particular date? The rate of tax can be increased on any date. That is not a question. The question is, if under GST there is an enhanced rate, then obviously you have to charge enhanced rate for the transactions entered on or after the appointed date. But kindly appreciate, in spite of this fact, I am always talking to my chartered accountant brothers that even if their turnover is less than 20 lakh, even less than 10 lakh, they must seek registration, because the voluntary registration is there. The reason is very obvious. Now, in case your turnover is assuming 9 lakh rupees and your profit is 3 lakh, out of 6 lakh, there must be 2 lakh rupees goods and services on which you must have paid the GST. You must have paid 35,000. So now, looking to the change scenario, charging of GST will not be a cost to your client. Either is a trader, or is a supplier, or is a manufacturer, or is a service provider. This credit will be available to him, so this is not a cost to him. So you will collect on, let us say, 9 lakh rupees, 20% assuming the rate of service tax for ease of calculation, 1,80,000, and 40,000 is the credit. You have to pay only 1,40,000 with no additional cost to your client, because this tax will be available to him as a credit. So I always advocate to my professional brothers, even if their turnover is less than the exemption limit, under GST it is very easy to get the credit. Unlike past, where I was being allowed to take credit of duty on inputs and capital goods, but because I was buying these goods from the manufacturer, the credit was not made available to me, because I was not having the proper duty paying document. But now, because the excise and other taxes are being subsumed in one tax, I'll buy even the stationery, AC, furniture, mobile phone, calculator, laptop or computer. So those credits shall be available to me. So once those credits are available, then I must seek voluntary registration, claim the credit and make money out of that. Once you can do the audit for 10,000 rupees or you can file the return for 10,000 rupees, if there is a saving of 40,000, you must seek registration for that and file the return.
Mr. Krishna Kumar says, whether composition scheme is based on aggregate turnover of preceding financial year or current financial year. It is preceding financial year.
Mr. Bharat Relwani, what about the SEO service provided to Google AdSense? First of all, I don't know what is SEO service. I don't know what is Google AdSense. So I'll ask people to move to the next question.
Okay. Mr. Praveen asking on transition provision, what should be exempted notified area industry having raw material? We have given the answer. In case you are in excise free zone, whatever raw material line, you might not have availed credit, but those credits would be available in terms of section 159 of revised model GST law.
Abhinav Ameria, will e-commerce operator will be allowed to raise taxable invoice? Kindly appreciate, e-commerce operator works on different permutation and combination. Let us say different business models. Let us say he is working on inventory model where he is buying the goods and then selling under his own invoice. Certainly he has to raise the invoice. Then he is not even e-commerce operator. Then he is selling the product through the website. I'll take an example. Let us say there is a Titan watches. They had a website and then you order some Titan watches from there. Certainly Titan has no option. It is a normal sale. Rather than you going to the showroom, you are visiting the website and they are selling the goods. So depending upon from where the invoice is coming to you, they will raise the invoice. But now, look at another part like Amazon, etc., wherein they are not dealing with their own product like Kindle, etc. So they are asking another supplier to supply the goods to you directly and you get the invoice from the supplier of the goods. And Amazon or Flipkart, they are charging commission from you for doing all this because they are collecting the payment and then they are giving to you. As we told, in that scenario, they will be liable to collect TCS from you, and then in that case they will not be liable to issue the invoice for the sale of goods.
Mr. Bimal G. Mulchandani, what is the treatment of input tax credit of IGST, CGST, SGST for goods and services used by SSE for personal use? Goods got lost or destroyed. If you look at GST input tax credit provision under section 16 and 17, credit will not be available to you.
Shefali Gilderwal, I think we have already answered this query, but anyway, let me read it if it's a different query. But I am sure, Shefali Gilderwal, we have answered one query. It says that any person representing such electronic commerce operator for any purpose in the taxable territory, does it mean it is for the service provider out of state or out of India? Secondly, it says representing for any purpose. What is meaning of representative? For example, a taxi driver also picks up a passenger representing Ola. If these kind of people can be taken as representative. Shivali, I would like to draw your attention to the old model GST law, where they had two terms. One is aggregator, another was telecom service operator. But once the industry has told them aggregator is also electronic commerce operator, so they have come out with this model. So as I told and answered in my previous reply, that these models work on a different business model. So if it is the inventory model, then they are a service provider. There is no question. But in case they are acting as an agent only, marketing person collects the payment and transfer, whereas the invoice is being raised by another person, in that case they will be liable to pay tax only on the commission which they earn on that.
Next, Mr. V. Ramdos is asking that goods and services supplied after transition is taxable under GST, no doubt, unless payment was received prior to commencement for the supply and tax thereon was paid under the present law. Under GST, work contract is a supply of service. The time of supply of a service is the date of receipt of payment or issue of invoice, whichever is earlier, no doubt. In many works contracts, advance payment are received prior to execution and invoicing and service tax is paid under POT rules, no doubt about it. In many states, VAT is not payable on advance payment. To the extent of payment received prior to the date of transition, has supply of service already been taken place? To the extent of tax paid from service tax, maybe you are being relieved from CGST liability, but to the extent of VAT liability, it will be occurring to you at the time of supply post appointed date. What happens in case where no invoice is issued under the VAT before transition date? You can't raise invoice unless there is actual transfer of property in goods. What happened to section 169 for material lying aside on which standard has been paid? Such material credit will be given to you. That is what 169 says.
The question is,
I just want to supplement 169 shall not apply. In case you are registered, then you will claim the credit because you already claimed it, you must have claimed in the return.
169 says if he is availing works contract and he has not availed central excise credit for works contract.
Once he has availed the central credit.
No.
Let me clarify in general way, not going to specific query. If I am a registered person, either under VAT or service tax law, then there is no doubt, once I am filing my return, I am claiming the credit, that credit will be carried forward. But in case I am a registered taxable person, then of course it is on the stock which is available. I just want to clarify that. Then Rahul Vadwa kindly explain section 194 again with an example. 194 is treatment of branch transfer. Let us say I am in Delhi. I am having a branch in Haryana wherein some kind of specific work is being done, and then the material comes back to my Delhi office and I sell it from there. So once I transfer the material without making a sale, otherwise than buy of a sale, so let us say I am transferring two products. So on that product the value is 100 rupees, but the consumption of material is only 40%, 80 rupees. So out of that 80, I have purchased material in Delhi for 60 rupees. So whatever VAT I have paid, I am supposed to reverse 2% of 60 rupees, that is 1 rupees 20 paisa. And once the goods comes after the job work been done from my Haryana office, then I am entitled to claim the credit. Now the law has said in section 194 that once you have reversed 120 and the goods has not come to you before the appointed day, that is, let us assume 1st July, then 30th June tak maal nahi aata, then your 120 rupees will go waste. So I was making out a point, if it is a huge amount, let us say 10 lakh rupees I have reversed, and then these goods must come back. If the cost of transportation of bringing those goods is only couple of thousand, then it makes sense to bring those goods back before the appointed day.
Mr. Jagdeep, Mr. Jagdeep is asking how GST on import of services for personal use will be levied. In case of import of services for personal use, if there is a consideration, then the GST liability will come, otherwise not. Handing over to Asim.
So with this, friends, this webcast will come to end. And on behalf of the Institute of Chartered Accountants of India and the Indirect Tax Committee, we convey our sincere thanks to both the distinguished speakers, P. Ashok Batraji and C. Bimal Jain, for sparing their valuable time. And I believe that their deliberation must have enriched you, and a lot of clarity must have been received by you. And I wish that with this continued education, we will be able to serve the various stakeholders in the GST regime with the best of our capabilities and the qualitative services. And I believe that you will be watching all the webcasts being organized by the Indirect Tax Committee and taking the benefit of the expertise available with our distinguished speaker. So with these words, I convey once again on behalf of the Indirect Tax Committee, thanks to both the speakers, and on your behalf also, thanks to both the speakers for sparing their precious time, and convey to each one of you for ongoing happy learning on behalf of the Indirect Tax Committee. Please take care. Thank you very much.
कैसा